Hello, everybody. Welcome back to another episode of the Market Futures Show. Thank you, everybody, for being here. Today is going to be a fun one. First of all, happy Mother's Day to all the mothers out there. Hopefully, people got to take some time and relax and enjoy, spend some time with their moms. It is a pretty happy Mother's Day based on the market futures, and the futures are green. Not just green, they're green. 1.29% up on the S&P. We are above the 200-day moving average. 1% up on the Dow Jones. 1.73%, almost 2% on the NASDAQ, and even small caps up 2.193% today. We are green, folks. For anyone that is wondering why are we so green, in about 13 minutes, we will have the overnight markets open. In about call it 25 minutes, Chris will join and we'll get his thoughts in terms of everything that's going on in the macro. The reason for why we're so green is because, well, this is what the White House put out today. For immediate release, May 11th, 2025, the United States announces a China trade deal in Geneva. Geneva is in Switzerland. I don't think we have an actual China trade deal officially done. But from everything that I've been reading, it seems like both sides are very eager to quickly get to a deal. That's why the futures are reacting the way they're reacting. And given they are so excited, both sides, in terms of the progress that they made over the 2 days that they had in Geneva in talks, markets like it. Markets really, really like it. Here is what Besant had to say this morning following the talks from the deals over the weekend.
To a great deal of the productivity we've seen. We will be giving details tomorrow, but I can tell you that the talks were productive. We had the vice premier, two vice ministers who were integrally involved, Ambassador Jameson and myself, and I spoke to President Trump, as did Ambassador Jameson last night, and he is fully informed of what is going on. So there will be a complete briefing tomorrow morning.
Besant will be on CNBC at 7 a.m. tomorrow morning. Trade Ambassador Greer also said this. This was, as the secretary pointed out, a very constructive 2 days. It's important to understand how quickly we were able to come to an agreement. That sentence stood out to me the most out of everything they said. It's important to understand how quickly we were able to come to an agreement, which reflects that perhaps the differences were not so large as maybe those thought before. That being said, there was a lot of groundwork that went into these 2 days. Just remember why we're here in the first place. The United States has a massive $1.2 trillion trade deficit. So the president declared a national emergency and imposed tariffs, and we're confident that the deal we struck with our Chinese partners will help us to work towards resolving that national emergency. Now, the way that he's talking, I mean, look at this last sentence that Greer says, we're confident that the deal we struck. I mean, I'm not a grammatical expert or a grammar expert. I probably messed up on just saying that word right now. And you guys know I suck at pronunciation, but the deal we struck tends to be past tense. And so whatever deal they struck, whether it's an agreement to continue negotiating, whether it's an agreement to fully, have a parameter that sets up the confines for what a trade deal will look like, or whether it's a trade deal in and of itself, it sounds bullish. It sounds pretty damn bullish. So from that perspective, look, I personally, my take, and I think no one actually knows what the hell is going on in terms of is there a deal or not. My take is that there is no deal. There is a very strong, or at least beginning of a strong understanding of what the framework would be. Like even with the UK, there's not an official deal yet. There is a clearly defined framework, and I think Lutnick did a really good job on Friday actually explaining what that framework is. I don't think the United States and China have that framework. I don't think in 48 hours you can get that framework, and if you can, then I guess we really didn't have any differences. Or as Greer said, the differences weren't as large as we thought. But I think both sides know, hey, we can't keep this shit going on forever. We need you. You need us. Let's, do what you want us to pay a little bit more. You want us to export more. We want a little bit less tariffs. Let's come to an agreement. And I think that is why the market is so excited right now. It seems like there is the chance for a deal to be struck pretty soon, even if the United States or the White House is saying that we already struck a deal. And so from that perspective, risk on. Risk freaking on. I think in about 9 minutes, futures are they're gapping up right now. I think the market's going to gap up. Now, could this be a sell the news? Of course. And we'll talk about all the different ways that this could be a sell the news. We could talk about how this priced in. But based on what you're looking at with the futures right now, it doesn't feel priced in. doesn't feel priced in yet. Now, tomorrow, if we don't get any meaningful understanding of what the deal looks like, maybe it sells off. But again, I kind of don't think the market's expecting some like strong theoretical understanding of what the deal is going to look like. I think the market's just looking for de-escalation, which was the biggest thing that Lutnick said Besant was going to Switzerland to do. I think we've massively de-escalated, which means I'm expecting personally that 145% to come down pretty aggressively. I think the vice premier in China would not be happy if that 145% did not come down. And I'm pretty sure that 145% was leveraged to be able to eventually, come down to something more reasonable, in my opinion, like 25 or 30%. And from that perspective, hopefully we got China to give us some concessions. And that's why the market is gapping up the way it's gapping up. Now, what did China say? We just heard from Besant. Here's what China's vice premier said. The meeting was an important first step. There are some differences, but frictions are unavoidable. The nature of China-U.S. trade relations is a mutual win-win. We are going to inject more certainty and stability into the world economy. China is ready to work with the U.S. to manage differences, extend the list of cooperation, and make pie of cooperation bigger. Essentially make the pie of everything that we can agree on, from concessions to agreements to potential tariff increases or decreases, much bigger for both sides to have a better chance to get what they want. I mean, dude, this is a total 180 from what China was saying last week, from what Trump was saying last week. Like, there are some differences, but frictions are unavoidable. That's him saying, yeah, we have some differences here and there, but we'll figure it out. Whereas 2 weeks ago, it was just like, we will not tolerate whatever the United States, and then Trump was saying, well, China better go check their records on who called first because we didn't call first. Like, all of that charades that both sides were playing, it seems to not be here. It seems to not be here. Exactly. I think both sides were posturing, as both sides tend to do in a negotiation. And as a result, bullish, right? Freaking bullish, dude. I mean, now we just get to wait for the next 7 minutes and see what prices we think are we gonna see on the overnight market. So let's do this. Put in the chat any stock that you personally want to make a prediction on, and what price you think it'll open up at. I think Robinhood opens up at 56. I think Nvidia opens up at 118, and I think Palantir opens up at 118, 119. Those are and then Tessie, I'm gonna go 304. There's no math behind those numbers. I'm just like throwing it out there, raw intuition. But S&P in the futures market, it's going to gap up above the 200-day moving average. We're going to open up at around 572. We kind of know that for a fact. So we will be above the 200-day. Now we got to hold that 200-day for us to really say we are back to a full-on bull market. But like ultimately that's definitely bullish. And the question is, does this move get faded going into the morning? Now, Bitcoin itself is not really moving crazy. Bitcoin did gap up to 105 at one point. It's at 103,983. You could say that Bitcoin had a lot of momentum already, so Bitcoin wasn't going to move on this type of a deal, or maybe that this was already priced into Bitcoin. But Bitcoin itself relatively flat, but still above 103, which is pretty damn incredible. Should we buy is the question. Well, I mean, I feel like the time to buy was the past couple months. Definitely in the month of April was the time to buy. Yeah, I mean, should you buy? Like, if you have a 5-10 year trajectory, of course, right? Like, it's you buy into that strength. I think the better question is, do you sell, right? Not do you buy, do you sell? So like, if you bought the Robinhood dip at 30, and let's say Robinhood gaps up to like 60 by the end of the week, do you sell at 60? I think that's the broader question. And I have some thoughts on it, and we'll go deeper into. We'll look at some other pieces of analysis. Kris will be on in about 20 minutes, so we'll get his thoughts. In general, dude, I mean, for those that missed the market close on Friday, we did get another piece of news by Trump on Friday, which was also one of the reasons we were up in the overnight market. So Trump said in a press conference after he signed some executive orders, by the way, he signed another executive order that we got to talk about. He said exceptions to bring tariffs down to 10% baseline are possible. We will basically always have a 10% baseline tariff. So remember, markets priced in a 10 to 20% baseline tariff on April 2nd. That's why we gapped up as soon as Trump started his Liberation Day announcement, and then he introduced the reciprocal tariffs, and that ruined everything. So if we end up getting 10% tariffs on China and 10% tariffs on the EU, yada, yada, maybe 20% max, I think we're going higher. I think the worst of it is priced in. I think earnings will have a chance to recover, even if Q2 is a little crappy. Imports will get better, which means that negative GDP growth number that we saw in Q1, which is primarily based on a lack of imports, that's going out the window. And I think we're back to growth. And then the only question becomes inflation, and we'll talk more about that. But if that's the case, what we got in the month of April from Trump was a dip. And the funny thing is, we know that retail bought the dip. The hedge funds sold the dip, and they sold aggressively. So if anyone's going to be buying, I don't think it has to be retail, although retail probably will be buying. I think it's going to be the hedgies because the hedgies need to continue to get some exposure after completely selling out of the market. And we know this happened, right? We know hedge funds have a short percentage that's as high as 2022. We know gold is going crazy. That's central banks and hedge funds trying to flee to safety. And we know that the hedge funds Mag 7 exposure, as shown by the fact that every Mag 7 is pretty much still down 20% year to date, is the lowest since 2023. So from that perspective, I think the next move up, the kind of pseudo gamma squeeze that we could have in the market, is big money that decided they really misunderstood the way Trump was negotiating. And although retail might have been emotional, retail might have been annoyed by what Trump was doing, the one thing you can't deny is that retail bought the dip. Even if you begrudgingly bought the dip, retail bought the dip. The hedge funds did it. They, manage a lot of money. They were probably scared of the implications of what would happen with their money. And the way we know this for sure is because what do the biggest money managers in the world spend money on? Research. All of the institutional research, whether it's Evercore, JP Morgan, Goldman Sachs, BMO, like Fundstrat, right? Tom Lee, Wedbush, Dan Ives, put out all the different banks you want, Bank of America, etc. They all took down their S&P 500 targets from the high 6,000s down to the mid 5,000s. And I think maybe one of the firms kept it at 6,100. So these like institutional analysts, they get paid literally thousands of dollars per page in their 10, 15 page report that they put out every other week from some of the biggest money managers in the world. And when they're reading those reports saying, hey, we're cutting our S&P target by 30%, like, what do? They probably sell, right? They take off their positioning, they de-risk. And now if it's risk on and we see those S&P targets go up again, I mean, I think it's going to be a lot of big money that's hopping back in. But this move could also get faded. So I don't know. We're going to have to see how this plays out. I think that's the first question I'll ask right here in the poll. Do you trust this grain? Do you trust this grain? We'll talk about bond yields in a second because those are up. Do you trust this grain? Again, happy Mother's Day to everyone that is a mother. And if you happen to be watching the stream and you're a mom, happy Mother's Day to you as well. Took my mom out to breakfast this morning and just got to relax and enjoy some time with my own mom. Okay, so bond yields, we got the market opening up in 2 minutes. Yeah, the 10-year is spiking. I don't think it's that big of a deal. It's a big deal in the context of refinancing our debt. It's not a big deal in the context of the credit market exploding, because if stocks were down and the bond market was going up, that's when we have an issue. If people are selling their bonds, which is causing yields to go higher to buy stocks, that's okay. Now, regardless, this is not a good thing for borrowing costs. This is not good for auto loans, mortgage rates, et cetera, which is why J-Pow needs to cut rates. Now, unfortunately, the bond yields are also going up because people are not expecting J-Pow to cut rates. Take a look at the June probabilities. 17.3%, dude, for a cut. This was 68% 2 weeks ago. Now it's 17%. So I don't know what Trump's going to do around this whole bond yield stuff that obviously needs to come down. But all I know is that as long as markets are higher, even if bond yields are higher, it's manageable. But eventually we need to get rates to come down. And I think the pressure, look, if the market's good, the economy's good, labor market's good, I think the pressure switches from Trump to J-Pow to cut rates. And the question is just going to be if he's going to be able to, give us what we want in terms of the cut. Now, the good thing is if we actually lower tariffs on China, theoretically, that's what J-Pow wanted. He wanted more certainty. He wanted less tariffs. If that's the case, there might be a world in which he says, you know what, let's cut, because now we don't have to worry about all the inflation, hypothetically, that would be coming from tariffs. All right, here we go. Sunday, May 11th, 8 p.m. The stock market overnight is now open. Let's see what we got. Robinhood, 55.50 on the open. 55.82 on the open. Tesla, 305, 306, 305.87, 306.04. Tesla's up. Palantir, 118.4. That's up 1.3%. Meta, 604. That's up 2%. Amazon, that's up 1.62%, 196. SoFi is up 1340. That's up 1.6%. PayPal is up 0.6. Tesla again 307. Robinhood 56. We got on Hoodie. Nvidia 118.95. 118.95. 119. Okay, I said Hood 56. I said Nvidia 118 to 119. So we got those. Palantir I also said 119. So we got that. Palantir looks like it wants 120. Googs at 154. Microsoft 442. MicroStrategy is up 2%, 422 right now. AMD's at 104. That's up about 1.9%. Everything is green. Roblox is up 0.5%. The S&P 500 is above the 200-day moving average, 1.24. 1.24. Qs are up 1.589. That's at 495. The VIX is down about 2%. IWM, that's up about 1.9%. Walmart, 97.50. Uber is up 0.23. QBTS, D-Wave, let's check that one. That was up 40% last week. That doesn't trade overnight, so we can't look at that. HIMS, which has some issues, kind of, but also kind of doesn't. A lot of the pharma names might have some issues. HIMS right here is up about 0.27%, not really moving up. In terms of pharma, and we'll talk about what's going on with pharma in a second, pharma is all down. Pharma's down across the board. For those that don't know why pharma is down, we'll talk about it in a second. But Eli Lilly, UNH, BMY, Amgen, Johnson & Johnson, AbbVie, Pfizer, all of these are down about 1%. We'll talk about what Trump said basically an hour ago that is causing this. What else? Let's see. SMCI, let's take a look at that. SMCI is up 2.3. AMD, again, up 1.9. Reddit is up 3.2. Palantir 119.96. Okay, there you go. Market likes it. Palantir back above 120, 120.29. Palantir up 2.5%. Look at Hoodie go 56.21. Trying to get back maybe to that $60 level. SoFi 13.35. Tessie, wow, 310. Dude, if you were on the Friday market open, I mean, Tessie made her move. And then she kind of relaxed, but now she's making her move again. So we got some momentum. Micron is up 2.5%. Let's go to the semis. Lam Research is up 1%. Micron's up 2.5. AMD's up 2.3. NVIDIA, 20 cents away from 120, 119.90. Now it's 10 cents away from 120. Dell's up 2%. Broadcom's up 2.8. ASML's up 2.4. Intel's up 1.3. TSM up 2%. Qualcomm up 1.2. Marvell's up 3.5. Marvell was up down 15% last week because they canceled their investor day. So that one's getting a little bit of love. It was also up 3.5% on Friday. And then ARM was down 8% on earnings. That one is up 2.27% currently right now. Crypto names, Marathon is up 2%. Riot is up 2%. Coinbase is up 3%. CleanSpark's up 3%. MicroStrategy's up 1.68. Hoodie's up 2.87. And then Bitcoin right there, just at 104, a little bit above 104. Currently right now. Dude, we're green. We are green currently right now. Let me look at China. Even China's up 2%. Baba's up 3. Wow, Baba, 130. My goodness. Market likes it for America and China. You got JD up 2.78%, and then Pinduoduo, that's up 2.75% as well. Currently right now, Hoodie 56.15. Tesla, my goodness, 314.20. Oh boy, that's green. I just opened up my portfolio for the well, yeah, we're green, folks. We are freaking green, dude. All right, 70% of you say yes, you trust the green. 70% of you say yes, you trust the green. I mean, dude, if we got to deal with China, we're back to where we were in January, right? Like, there's definitely some macro issues we can't ignore. I'm not saying we have to go back to all-time highs, but like, the overall trend of AI, technology, earnings growth, deflation, AI being very deflationary, and a deregulatory business environment, like all the things people liked Trump to like the reason he was put into office for all these pro-business things. If the tariffs are not going to be as consequential as we thought, I mean, are we kind of back to where we were? Just took a 5-month detour, which gave us a great dip to get back here. Even Disney right here, up 0.54%. Meta right here, 605. Palantir, 120, 131. Palantir's not stopping. Nebus or Nebius. I'm going to have someone come on the channel later this week and explain one of the big deals that they had on Friday. This thing's up 12.66% based on a deal from Friday. I don't fully understand the dynamics of it, so I'm not going to talk too much about it, but it has to do with another company that I believe they took an equity stake in. So I'll have someone on the channel, hopefully tomorrow on the market close, come on and discuss a little bit more about it as well. Wow, Lyft as well. There you go. Lyft. It was already up 30% on Friday. It's up another 5% currently right now. Yeah, I imagine if you open up your portfolio right now, you are going to see some green. It's going to be, unless you're deep in pharma, it's going to be very hard to not see some green that's happening somewhere, which means this is a market-wide pump. This is a market. I mean, what's red? Let me see. VIX is red. That's good. Pfizer's red. That's pharma. What's red? GameStop's green. Archer's green. Intel's green. Square is green. Disney, Elf, HIMS. HIMS right here. Wow. 3.2%, even with some of the stuff Trump said that we'll talk about in a second that might not be as bullish, but HIMS even benefiting from this momentum. SoFi 13.59. Tessie 3.11. Then Robinhood trying to go for 57. Robinhood trying to go for 57. Soundhound is not trading overnight. Soundhound does not trade overnight. Rock Lab as well doesn't trade overnight. You can check in the German markets. Let me see. Rocket Lab Germany prices. It should trade overnight at this point. I don't know why they don't trade it overnight. Rocket Lab. Yeah, it doesn't trade overnight. The German markets doesn't have it either. Yeah, okay. So Rocket Lab, we don't have results on that, but Rocket Lab probably, I would imagine, gaps up with everything else. Trade Desk as well. Great day on Friday. Trade Desk, that's up another 3.76%. It's pretty incredible, dude. Pretty incredible. Nike is up 3. Dude, Nike doesn't go up 4% like randomly. So that's, I mean, you got all the value names that are getting some love as well. Airbnb is up 1.52%. Atlassian's up 2%. GoDaddy's up. NVIDIA 120, baby. There you go. There she goes. NVIDIA. Apple, even Apple's up 2% after a horrendous week that it had. Duolingo's up another 0.10 after being up 5% on Friday. Twilio's up a little bit. I mean, you got a lot of these names seeing momentum regardless of the sector that they are in. Rocket Lab's on Webull. Okay, let me check Webull. Rocket Lab overnight on Webull is up 4.3%. 4.3. Is it on Robinhood? Did I miss see it? Rocket Lab. Oh yeah, it is on Robinhood. It's just not saying the overnight. Okay, yeah. So it's 4.3%. 2140 on Rocket Lab. 2140 was down 10% on earnings on Friday. I still don't know exactly why it gapped down 10%, but it's up 4.3% currently right now. Jose, shout out to you, my brother. Gifted 5 memberships. Jose, thank you for the 5 memberships. 5 of you just got gifted memberships on the channel. Thank you, Jose, for being here. We'll have Jose on during the week to give us some more update on the semis. But Jose, thank you for those memberships. SMCI right here up 2.84% currently right now. All right. We're green. We're green. We're green. We're green. We are green. I think we should talk a little bit about some more details on why we're green, given how green we are. Robin at 5680. It's kind of hard to not look, though, right? It's kind of hard to just look away. Palantir 120.64. And then the S&P, if we can just hold that 200-day moving average at 571, that'll be a big freaking deal. By the way, Powell speaks this week. We have CPI this week. We have PPI this week. We got jobs data this week. We got Powell speaking this week. It's going to be a crazy week for the macro. We also have a ton of earnings, even though we don't have NVIDIA until May 28th. But if we can get any substantial details on the China trade stuff by tomorrow morning, again, Basent will be on CNBC 7 a.m. Eastern to discuss it. Maybe we can hold a lot of this momentum. Maybe we can hold this momentum. Okay, so for those asking about why bond yields are up, remember, bond yields go up when people sell bonds. People buy bonds when they want a guaranteed kind of fixed rate, in this case on the 10-year, at 4.4%. If they're feeling a bit risk off, for example, they don't want to take a risk on Palantir, NVIDIA, Bitcoin. They want that guaranteed 4% for the next 10 years. They will buy a 10-year bond. The buying pressure gets yields to come down because that makes sense, right? A lot of people are buying, so that starts to come down. Inversely, if people are selling, yields go up in order to attract people to start buying. Well, you might be asking, why are people selling bonds right now? Because they're buying NVIDIA, Palantir, Bitcoin, right? Because they're buying equities that offer more of a risk adjusted premium because they feel the risk should be discounted because there's a trillion reasons, but the main reason tonight is that we got to deal with China, theoretically. So that's why bond yields are going up. Now, is that good for the economy? No, that's not good for mortgage rates. That's not good for the refinancing of our debt. In fact, there were a lot of theories in January that Trump's trying to crash the economy to get bond yields to come down. And I still kind of believe he tried. It's just bond yields, were more resistant and hesitant than he thought. So we got to do something about that. The easiest way to resolve that is Jay Powell cutting rates. The question is going to be what gets Jay Powell to cut rates. I think that if we announce a substantial deal with China in the coming weeks, Jay Powell will be more likely by June to cut rates. But as of now, he's not cutting yet. So I don't think we're out of the woods, but a deal is definitely bullish for equities. And you can see right now, Palantir 120, almost 121, Tesla 312. I don't even think it got to 307 on Friday. And then Robinhood trying to get to 57. The market obviously likes it. The market obviously likes it. All right, so here's the question. 71% of you said you trust the green, but is this a remake of February where everyone's super bullish and eventually you're going to get whipsawed to the downside and this should be the time to sell? That's my question to everybody. What do you guys think? That's my question. I think there's a lot of ways to answer that question. And I already gave my answer 20 minutes ago. My general answer is I think the worst of it is done. So I don't think that means you have to go balls to the wall and start buying a lot more because obviously prices are not the same as they were a month ago, even 2 weeks ago. You know, you had Robinhood at 40 2 weeks ago. You had Palantir at like 95 2 weeks ago. Obviously, we had 65 on Palantir, 30 on Hood a month ago. But I also don't think that means you have to sell. I think you could sell calls into some of the volatility and pick up some of the premium, but I don't know if that means you have to use this as your one chance to get out. Now, there might be some arguments why, hey, it's a burning ship, it's a sinking ship, it's time to get out, and this is a great opportunity. I just think the perception of this deal, especially if it's legitimized by some fundamental metrics like we did with the UK deal, is going to get big money to get a bit upset that they missed the rally, and they're going to have to begrudgingly buy. And as a result, selling into that might not be the smartest idea in the world. But obviously, you know, profits are profits. It just feels like this is kind of setting up to be a bit of more epic face ripper, even if it's not going to be all at once, which, to be honest, kind of has happened all at once. I mean, in a month to go down, 15% on the S&P and then to come back above the 200-day moving, it's kind of crazy. And retail, you know, obviously took big advantage of it as well. All right, I see most people saying right here, yeah, they are holding, and if anything, they're buying into it. Look, that's what retail tends to do. I know a lot of retail investors try to, you know, position their portfolio. Like, it was so funny, dude. It was, you know, there's a lot of Twitter accounts I follow that are like in the finance space, and in the worst of it, right, April 8th, April 9th, whatever, these accounts were like, this is why you need to hedge, and they were like talking about all these different ways to manage a portfolio and do all these unique option strategies to hedge. And I'm just like, dude, the majority of people on Twitter that care about stocks are not active managers that are literally hedging every little move, right? Like, yeah, everyone got whipsawed by a 15% downturn because no one expected these reciprocal tariffs, but it's almost like they were lecturing everybody on how you need to learn how to hedge. And I'm like, yes, hedging is very valuable. I'm not saying that's not a valuable strategy, but it's like the idea that every retail investor was going to know exactly how to buy these puts or these calendar spreads to hedge their portfolio. It's like, no, that's not what, like, retail buys the dip and we hold and we bet on the overarching story to be positive in the long term. And that tends to work out. That doesn't mean there's not nuanced moves you can make in the middle of it. But for all the people that were so obsessed with hedging, AKA the hedge funds, they missed it. They completely missed it. And we have all the data to show that they completely missed it. So it's kind of hilarious to see the smartest money in the world once again be the dumbest money. The smartest money. And maybe I'm talking too quick. Maybe this gets faded. Right? Maybe this thing goes back down all the way to prices we saw in April. But the smartest money in the world, we have all the data to show us, turned out to not be that smart in terms of just reading what Trump was doing, which in a nutshell was trying to gain some leverage and eventually was going to walk everything back. So let's get into some macro data, and then I think we'll have Kris on in about probably 10 minutes. I think he's going to be on. And then we'll get some thoughts on what he has. So a couple things I want to show you guys in terms of some charts I compiled over the weekend. And I think, well, first let's start with what happened with Trump. So Trump put out an executive order. It was a big one. This is what it says. I'm not going to read the whole thing because he put out a full essay. But essentially, what is he doing? He is doing an executive order to reduce U.S. prescription drug prices by 30 to 80% using a most favored nation policy, effective immediately. He's going to be signing it tomorrow at 9 a.m. to ensure fairness and save trillions. So Trump essentially says, hey, you know, the United States has been paying unnecessarily 5 to 10 times more than any other nation for the same drugs that are manufactured in the same exact laboratory or plant by the same company. And as a result, you know, essentially he's putting, from my understanding, price controls. I don't fully understand the nature of what this policy is. I tried looking up some details around it. I'm still trying to get more information. I'm sure tomorrow we'll get a lot more details, but he's putting on price controls for prescription drugs in the United States. And that's why I said if you own pharma, you might be getting hit. A lot of people thought this would affect HIMSS. It would affect their margins, affect their demand. I think it could, but right now HIMSS does not care. It's up 3.46%. So if the shorts were thinking this was going to be the catalyst, I mean, maybe it is, but as of right now, it's not affecting it. But everything else is getting hit. So J&J down 1%, AbbVie down 0.6%, Eli Lilly down about 1%, Merck down 1%, Bristol Myers Squibb down 1%, et cetera. Now, these aren't dramatic moves in the overnight markets, but they are kind of hints that the market is a bit scared that this policy is in some way going to lower margins by 30 to 80% theoretically for prescription drug companies, and might increase demand, but the increase in volumes is not going to be able to make up for what Trump would call absurd prices that we have currently on drugs right now. So Nick says right here, it is bullish HIMSS, bearish UNH. I've seen this talked about as well over the past 30 minutes since this came out. United Healthcare, again, makes a lot of their money with price gouging when it comes to drugs. Hims is more of a neutral platform. You can see UNH right here down about 0.6%. UNH is down about 20% over the past month. For Hims, they already kind of sell cheap generics, so it might not necessarily be the biggest hit on their margins. GLP is very high margin, so that might be where they take a bit of a hit, but one could argue that it actually leads to more volumes, aka more people signing up for the service. And then once they get hooked into the sort of Hims personalized ecosystem, which is what the Hims bulls would argue is the moat of Hims, then maybe it's not the most bearish in the world. I'm still kind of trying to understand it myself, but that is one thing that Trump also announced literally an hour ago, which is creating some pain for the pharma stocks. Tesla right here, 312, Hood 56.50, Pouncer right here, 120.51. Now, again, in the midst of all this, remember, a deal is not done. A deal is not done. I know the market's acting kind of like a deal is done now, but a deal is not fully done. It's just the market is so excited that the comments by Besant and China were so positive, so freaking positive. Again, these were comments that you couldn't ask for better comments from either side. That, well, the market's saying, all right, if they're gonna get this excited for these trade deals, and they're gonna tell the United States and China from both perspectives, hey, we feel that we got a good deal, or we got a good framework to begin negotiating done, then market's gonna price that in. And what we're seeing right now in the overnight markets is the pricing in of what Besant said right here, which is that he'll be making full details tomorrow in the morning in a full briefing, but he feels that there was a great deal of productivity that was seen over the weekend. You know, it was so funny. So Saturday, I woke up at 1 p.m. because every Saturday I wake up, because I don't sleep during the week. So Saturday, I wake up at 1 p.m. I woke up at like 10 a.m. And some of you guys might have seen this. I woke up to a bunch of tweets. I was like half asleep. I woke up to a bunch of tweets. It was actually at like 7 a.m. Of everyone saying breaking, China leaves the United States negotiations. And it was Reuters that was reporting that China's upset or whatever. And so they just abruptly left. Apparently, in Switzerland at that time, it was lunchtime. And so China left to go get some freaking lunch. And so I thought about tweeting. I was like, oh, this is pretty substantial. But I was like half asleep. I'm like, you know what? I remember my exact thought at the moment was like, if they can't get a deal done, I don't care. And I threw my phone away and I just went to sleep. I was like, I don't care at this point. I was like, you know what? If they can't get a stupid deal done now that they're in Switzerland, I don't. And then I wake up like 7 hours later, and then I see the tweets like that are edited with, oh, this was a lunch break. It was hilarious, bro. It was like everyone was on edge of just like, oh my God, China left the meeting. They're not talking anymore. When in reality, you know, deals were being productive. They just needed some food in their system. So it was pretty incredible over the weekend to see this play out. And obviously now we're seeing it in the futures. Trump did say to buy stocks. That is correct. Kind of hard to fade the Donnie T signal when he says to buy. Again, for those that missed that clip, this was on May 8th. It is today, May 11th. Trump did say, hey, it's a good time to buy stocks.
You better go out and buy stock now. Let me tell you, this country will be like a rocket ship that goes straight up. This is going to be numbers that nobody's ever seen before. That's a very important element of all of this. You know, if we get that.
So last time he said to do that, the S&P was up 10% in like 2 hours. I mean, it's the Donnie T buy signal. It's the Donnie T buy signal. And that's some of the momentum that we're seeing right now. Okay, let's go through some charts. We got a bunch of charts to also explain why we should be a bit more bullish. Real quick, let's take a look at the overnight markets again, and then we'll get into some charts. Pouncer 120.64, Tessie 312, SoFi 1350, PayPal 70.99, Nvidia 119.80. Again, up almost 3%. Grab doesn't trade overnight. AMD 105. Back to where it is after the pump after earnings. S&P still up 1.2. Uber's up 1.3. Lyft's up another 3.6. Home Depot up 2.31. Micron is up 2.6. And then Hims right here up 2.97%. I don't expect this entire move to last till tomorrow. I mean, if even, 30% of it. So if Hood's up, 3%, if we're up 1% by the end of tomorrow, I'd be happy. But it is showing in terms of how excited the overnight markets are for the potential of a meaningful trade deal. And we really don't have much volume, right? A lot of volume is going to come at 9:30 tomorrow when the market's open. And that's where we're going to see how sustainable and how much more money wants to come in on these moves. I don't think VG trades overnight. Venture Global, yeah, it doesn't trade overnight. So that one's at 950. It was up I think 17% last week. So it had a good week last week, but does not trade overnight. Okay, cool. So let's look at some charts. This is one of the reasons for why maybe the dip was not only bought by retail, but was also bought by some of the biggest companies in the world, and kind of led to the accentuation of what we saw in that 9-day stretch of April heading into May, where we were super, super green with 9 green days in a row. Buybacks, 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 buybacks. These are 4 different charts looking at the buyback data relative to the S&P 500 since 2019. One of these goes back all the way to 2000. Folks, the key takeaway from this chart is that there have been, in the past year, $192 billion of buybacks from May 2024 to May 2025. That is greater than one of the biggest amounts of buybacks we saw back in January 2021 to May 2022, which was 160 billion, so 30 billion greater. And it is the most amount of buybacks in over 20 years. This chart right here at the top shows you since 2019, and this chart at the bottom shows you since 2000. Whatever chart you want to look at, whether it was Tesla, well, Tesla doesn't do buybacks, but whether it was Palantir, Robinhood, Alibaba, Google, Meta, the Mag 7, obviously Microsoft, Apple, we definitely know Apple. We have seen an immense amount of buybacks realistically at the end of Q1 going into Q2, which has been about 2 months. And that could have also been a reason why that April 8th dip lasted for like basically a week, and realistically lasted a day. But then I guess it started recovering in a week, but it was still down pretty badly. And then within the next 3 weeks, it started tracking back up to where it was before Liberation Day. I think in Q2, we're going to see a lot of companies say that we bought back our stock aggressively. And that's a good thing, right? You should be buying it when things go down. But this could be another one of the reasons why the market got some momentum that we got. Then take a look at this. This was published this morning by Evercore ISI. Again, another research firm that hedge funds and money managers pay literally thousands of dollars a page to be able to access their research. What's their title today? Bear market is over. New bull will be a grind, not a moonshot. I mean, you can't make this up, right? Like when you get these types of funds or research firms capitulating, it's pretty damn bullish. So here's what they say. In a wide-ranging note to clients on May 11th, strategist Julian Emanuel, who I actually have a lot of respect for, likened the recent market chaos to the panic surrounding 1998's long-term capital management crisis. But while that episode was followed by swift Federal Reserve action and a rapid return to new highs, today's environment is more constrained. He writes, Trump blinked, putting a pause on tariffs on April 9th, sparking a buying stampede that ended the 21.3% cyclical bear. But instead of a quick rebound, he sees this recovery unfolding as a process with new highs for the S&P 500 likely pushed into 2026. So they still have a $5,600 target, which we are currently above. But they are agreeing that, hey, that whole bear market thesis that people had for 2 weeks in April, it's hard to still have that thesis if you believe that we get a China deal, and if that China deal is coming relatively soon. So from that perspective, again, you just might have more and more of these research firms come out with new price targets and new notes saying it's time to buy. And as a result, you might see some more buying pressure as well. All right, let's get one of our analysts onto the show and get his thoughts on if we should trust this green and if this momentum has legs behind it. What is that name?
Kamala Patel, bro. Y'all calling me,
Name?
so I'm gonna embrace it. You know, it's a great name. It's a great name. So
Who is this? Kamala Patel.
let me see. Let me adjust my my darkness levels. You know, got to make sure I get the right mixture in there.
Oh,
there you go.
Goodness gracious.
All right. So today's news totally, it's good for the market. I like it. I think getting off of this tariff hump is going to definitely help markets going forward. Still think economy needs to be paid attention to because there are stresses in the credit markets that could end up derailing things. You know, bankruptcy filings are starting to come up. I mean, there are a lot of things that are breaking underneath the surface. Of course, it's not going to be presented in the public markets, but in the private market, it is a much bigger deal than what's being let on. So I'd say this is good. I hope the administration realizes that they made a mistake with the level of tariffs that they did. And I think they did. I don't think this was some kind of grand strategy. Okay. I know a lot of people think that this is some kind of like 4D chess move by the Trump administration. No, I think the idea that they had was moderate, but Trump went ahead and went to the extreme, and the market reacted very negatively. And then the Trump administration, luckily for Trump, and this is something that Charles Gasparino said, the good thing about Trump is that he pivots. Unlike the liberals who basically have an idea and they'll push that idea to no ends. I think with regards to Trump, if something isn't working, he'll backtrack. And clearly, the markets did not agree with the move that he made. And right now, all the reversals that we're seeing, the deal with the UK, this supposed deal with China, I think it's working in our favor right now. So, well.
Okay, so here, let me ask you some juicy questions about this. All right, let's try to dig deep.
Mm-hmm.
Is this a trap? Is this like, hey, you got an opportunity to sell, get the hell out? Because Tesla at 312, I think you would say kind of crazy. I think you would say Palantir at 120, kind of crazy. So why is it not February 2025?
Well, I mean, value, you have to look at every company individually, of course, right? So there's a difference between macro and then micro. And sometimes you're going to get companies that follow the macro trends. Right now, the business of Tesla has not changed at all compared to last month. Last month, when earnings came out, everything was still down. Earnings were down. Rate of the growth rate is down. Profitability is down. Everything is down. So Tesla is rallying right now based on tariffs news, right? So this is like a general market move up. That doesn't mean that Tesla as a business is doing well. And the tariff impact on Tesla, in my opinion, wasn't even that big to begin with, but it is what it is. And so a lot of people are buying Tesla at 312, which is fine. But I would say to everyone, find the companies that are great companies that are growing profitability, that are buying back shares, all that good stuff. And at the same time, now they're going to get a macro tailwind behind them. Right? So avoid the companies that on a micro level are very undervalued. Don't buy into them. Just stick with the high quality names. And those are the ones that are going to outperform going forward, And I know I know you're muted.
You're saying it's still a stock picker's market, basically.
Yeah, it's definitely a stock picker's market. I mean, one of the things that I think people are going to eventually realize is that slowly liquidity is being drained from the market. Okay. So you look at government spending. Government spending is coming down. A lot of the policies that we had under the Biden administration were very stimulative to the general economy, literally spending money right and left. A lot of that money is now being pulled back. So as an example, you look at student loan borrowing, right? The Trump administration has restarted student loans. All of these people that haven't been paying their student loans, they're all going to go into not forbearance. They're going to get kicked off of forbearance and into delinquency status. And then the credit is going to go down. So if people, and I'm sure that there's a good percentage of people that don't want to, lose their credit, they're going to end up paying. And that means that that's less disposable income for those consumers. So, a lot of the policies that the Trump administration is coming out right now with are very disinflationary, but it also means that it's basically sapping away some of the buying power from the general consumer. And the consumer is, basically used up a lot of the COVID savings from when they got it in 2020, and then credit right now is also very expensive. So, the chances are there like I said, there's a material slowdown in spending from the consumer. That's why we're seeing the CPI numbers come down. And also at the same time, unemployment is starting to rise. So, I don't think unemployment is going to get back to normal again, like go back to being all-time lows again, unless the economy somehow magically flips directions right now. So, yeah. I think now it's great to see this market green, but like I said, let's just keep it real with everything. Go ahead.
What do we do about this thing? How do we navigate the 10-year?
So that's the thing. The administration is going to have to figure out how to solve this, because this is one of the legs that they need to figure out when it comes to getting the deficit down. Right? There's no way that the Trump administration can hit their deficit reduction targets without getting long-term yields to come down. So, there's multiple ways that the administration, the Fed, and the Treasury can coordinate different things that are going to be moving down. One of them is making SLR ratios exempt treasuries from them. So it's a banking thing where right now, if you, you know what, I'm not going to discuss it
We don't have to
too
go super deep, but
complicated.
essentially it allows banks to hold more treasuries on their balance sheet, which allows them to buy
Yeah.
treasuries. It gets yields.
Yeah.
That's it. That's all it is.
Yeah. And then at the same time, you've got, basically the Trump administration making these deals out there, likely to basically take the handcuffs off of Jay Powell from possibly lowering rates going forward, right? So if that happens, then people are going to front run that by saying, okay, look, I've got this 2-year treasury yielding 4%. It's rolling over this year. So what am I going to do? I'm going to move them to the 10-year and the 10-year to the 30-year. So it's basically like a cascading effect. Then, of course, you've got different policy actions by the Fed that can actually help control as well. The key is getting inflation down. I mean, every projection that I'm seeing right now is showing inflation starting to make its way down, and that trend has not broken, and hopefully it goes in that direction. So.
Okay, so bullish, right? I mean, it
depends. Once again, it really is a stock picker's market this time around. Before with the Biden administration, a lot of it was just excess savings combined with excess spending and excess liquidity being pushed into the consumer. Consumer spending rose significantly during that last 2.5 years of the Biden administration through the IRA and all this other stuff. The Trump administration is taking a hatchet to all of that. So.
I agree. Let's listen to Lutnick. He was on this morning and see what he has to say about some of this trade deal progress.
Overseas, okay, you'll pay tariffs and you'll be less competitive in America. So build here. I mean, that's the idea. Open your markets if you want to continue to, to not bring things home to America. Open your markets. Let our exporters sell to you. Finally, get some fair trade. And let's bring lots of manufacturing back to America. But we are not, under any circumstances, focused on China when we're talking to other countries. When we're talking to China, of course, our trade team is focused on China. But when we talk to other countries, there was no conversation in the UK or India or Japan or any of these other countries about China. Leave China alone. We are trying to grow America.
Okay, so you mentioned the UK deal, a big feather in the cap of the administration. You were right there with the president as he's making this announcement. And it begs the question now about that 10% tariff. Is that going to be the baseline? Here's what the president said Friday.
But basically, you have a baseline of a minimum of 10%, and some of them will be much higher, 40%, 50%, 60%, as they've been doing to us over the years.
So those numbers may sound really good to China if you're talking about 145 or 80%, but how are those numbers landing with the other folks you're negotiating with?
So you saw on Liberation Day, the president put out a whole series of tariff rates. And then the objective is to bring manufacturing back to America and also lower those rates. So those countries, each of those countries can open their markets, make a more fair trading deal with America, allow Americans to export to their country. Finally, in a way, you saw in the UK, we opened their market, $5 billion of exports. Many of these countries will be, because they have bigger economies, even bigger. And our idea is have the Americans be able to export to those countries, grow America, right? Ranchers, produce, vegetables, machinery, ethanol, things like that, sell to those countries, lower their tariff rate, and then bring manufacturing back to America. So I think we're very, very focused on America's golden age coming. We're going to make trade more fair, and it's going to work brilliantly for Americans. Both if you make it here, there's no tariff, and we can sell much, much more fairly everywhere in the world.
So Americans are watching and hoping for those long-term benefits, but our polling shows they're pretty skeptical at this point. 72% tell us they think tariffs are going to make the things they pay for right now more expensive. And a majority of them think that tariffs are actually hurting our economy. I mean, how do you work against that perception with messaging while people wait in the interim for something to happen?
You just do trade deals, right? Like, look at the UK deal. Right? Just look at that deal. It opens the UK market for the first time to $5 billion of exports. I mean, go talk to a beef rancher right now or a corn farmer right now. They are ecstatic. They've never been allowed into the UK market, and now they'll be allowed. So each of these countries, we're going to break open their non-tariff trading barriers, get our people the ability to export there. That's going to be great. We're going to have huge jobs in manufacturing. You've heard the president talk about trillions and trillions of factories being built in America. Those are construction jobs starting now, and then those products will not have tariffs on them. So I just completely disagree. What you're going to see is prices are going to stay stable once this policy is done. You got to give the president a chance to run it. But over the next 3 months, this policy is going to show trade deal after trade deal, opening markets, reshoring manufacturing, and no tariff charged if you make it in America.
Okay.
What do you think, Chris? You think this UK deal was good? You think Lutnick is turning into a favorite again?
No, man, there's nothing to gain for the US from this trade deal other than, okay, yeah, we got access to some of their markets. But I mean, look at the UK tariffs. They were 5.1, now they're 1.8. We went from 3.4 to 10%. You know, we had a trade surplus with the UK. So I don't even know why we were trying to kick them. It doesn't make sense. So now the UK is more likely to just, you know, try to get things from other places. I don't know. The administration right now is taking a lot of risks with their trade policy. I do think that a certain level of tariffing is not a bad idea. 10% probably works for most countries, especially when you consider like just not inflation. What is that called? FX changes can negate the tariff right away. Like if literally if the pound went from $1.10 to $1 equaled the British pound to 110, and then it just normalized to 1-to-1. There you go. That's your 10% tariff gone. So the dollar weakening pretty much means that all the other stuff doesn't really make that big of a difference, right?
Right.
Some of the costs are going to be, of course, absorbed by the exporter. Some of it's going to be absorbed by the importers. My only thing is, to me, when I see this, I'm like, oh, this is another way to slow down GDP. Like, I know the whole thing is this is going to bring back jobs to America. Yeah, but you're also deporting a whole bunch of people too. Like, you're building all these quote unquote trillion factories. Who's going to work at these trillion factories?
I did like this UK deal. I know it was the easiest win we could have got, but I liked it. And I thought Lutnick did a really good job explaining it. He didn't sound stupid on Friday in the Oval Office explaining why it was a good deal. I'm curious, though, with China, Japan, South Korea, India, you know, do we get any meaningful concessions? And I think if we do, I think people have a short memory, bro. People are not going to care about the lows. Like, they're just going to be
it will generate more revenue for the US, that's for sure. Like that's I think the ultimate goal of all of this is just basically get the deficit down, right? And how are they going to get deficits down? Of course, you can grow your GDP. That's one way, right? So that this way you can increase taxes and the tax comes in and you reduce down the deficit that way. The other way, of course, which is the draconian way, which is the Trump administration, what they're doing is doing tariffs. Now, I think there's a certain level of tariffs which can work to our advantage. I think, once again, that's set at around 10%, which should have been the original plan to begin with, but I think they went really hard and they're just backtracking right now. I don't know how many jobs are actually going to be created in the United States where people are going to be like, to save 10% on a tariff, I'm going to move my entire production line to the US and pay the workers in the US compared to other parts of the world. Like, just think about the wage differences that we have between us and like Vietnam. You really think to save, let's say, even a 40% tariff, they're going to move their production from Vietnam to the US? No, they'll just raise prices and call it a day. You know. Yeah, Amit, you're muted. Yeah.
Sorry. Do you hedge against this? Like, how do you play the portfolio? Do you just ride it up, or do you think this is? You've mentioned some bearish things about tariffs and macro data.
Mm-hmm. Yeah.
Either the bearish macro data gets a rate cut, which then kind of turns bullish, but if it doesn't, like, do you think this is a time to take some profits here?
I would say, depending on which companies you're invested in, just to lower your price targets for future gains, right? So if you had a price target of, let's say, $50 on a company based on a 22 multiple PE, right? Right now is a good time to say, you know what, maybe it shouldn't be 22 PE. Maybe it should be closer to 20, right? But this is like a mature company. I'm not talking about the Rocket Labs of the world or the Hims of the world. They don't trade based on fundamentals. If you try to put like a fundamental valuation on it, you're going to be wrong completely. They run on sentiment, right? So as long as positive sentiment is behind them, they're going to run higher. Tesla is the same thing. Tesla does not run on fundamentals. So if you say, oh, look, Tesla's PE is X, it should be trading at Y. Like, no, you're not going to get that. It's going to trade in a complete different direction. But if you have like mature companies like banks, right? Like you look at Truist, like TFC is like trading at $39. I had a $45 price target on it, right? I was going to adjust it to like $50 because I thought the market deserve the benefits that they have from selling their insurance business. But now I'm like, probably should dial it just back to 45 again, because that's what makes sense, for that particular industry. So
Right.
My thing is right now, if you're looking at your traditional companies, then yeah, of course you can use traditional valuation metrics to figure out like where the stock should land. On the other hand, when it comes to like, for me, I know some of the people in the comments are like, oh, hedging, you're like, dude, you don't drive a Ferrari, without insurance, and you don't ride the market in this kind of volatility without insurance, because you never really know when something is going to crack, and then all of a sudden now you have to deal with the fallout of it. So I think this is a golden opportunity, with the administration saying outright that one of our eventual goals is to get inflation down and get the Fed to cut. And as the Fed cuts, that's going to put pressure on long bonds to come down. So, for me, the way that I'm hedging is just making sure I have exposure to the long end of the curve on the treasury market. And so this way, if there is some downside in the stock part of it, the other side can cover it, in which case now I can just use that cash from that move to buy into my equity positions as they go down in value. Right.
Yeah. My favorite hedge this whole year has been covered calls. Like,
Yeah.
It's just like, because like things run up, but it's not 2024 where they just rocket ship. Maybe that's what it turns into, and covered calls can go underwater. But so far, covered calls have been doing very well in 2024.
Yeah. I mean, right now is definitely, and like I said, I told this on Cash Flow Chronicles. I said this is like a TJ's world market right now, where you're seeing these crazy volatile moves, which means that the options premium that you're going to get is actually really, really good. If you see companies moving 4 or 5% on a day-to-day basis, that vol is going to give you huge premiums. And I'm talking about selling shit that's like super far out of the money and still getting a great return from that. And in my opinion, the risk is very low, only because when things move down, right, you could basically just, buy back those calls and that's what it is. So you just keep your eye on the company being oversold and overbought, and basically sell options against it. Just make sure that your strikes are so far away that, they're not going to basically get you out of the position, at a price that you may not like. So, covered calls right now is not a bad idea. Covered calls and cash secured puts, maybe not so much with cash secured puts, but maybe covered calls for sure.
The puts can work on a stock that like a SoFi, right? Like SoFi really hasn't moved in this whole run. So if you still feel comfortable at 11 or 12 bucks on SoFi, then put premiums are not horrible. But like on a hood, which could go back down to 45, maybe selling the put is not the easiest thing to do there.
Yeah. I mean, like I said, you have to find out what you're basing your targets on. Like like it's not like, oh, well, hood is trading at 56, so I should sell an $80 call option. Like, what's the logic behind selling that $80 call option? Do you think, it's worth $80? Is it not? Is it trading on sentiment? So my thing is always, when it comes to something like Robinhood, when it got down to the 35s, it was like perfect opportunity to buy it, right? Buy some stock. And now that it's ridden up, and now you're seeing the RSI like way up there, now is a good time to sell a covered call against it.
Agreed.
Once again, not something like that's close to the money or anything. And don't get like the one thing I'll tell you is, for option sellers, do not get premium drunk. Premium drunkenness is the worst thing that can happen, because what ends up happening is now you start picking shitty companies to run a wheel strategy on, and then over a long time, you're just going to keep getting burned, right? So you have to make sure that the company you buy is, and there's a good thesis behind it. and go from there.
So I want to show you a clip from Instagram that Steve sent me today. Get your reaction to it. I think the guy might curse in it. So for everyone who hates cursing, just watch out for that. But this is people should know him. He's like a famous CIA negotiator dude. Here's what he had to say about the Trump tariffs.
Trump's tariffs are. People misunderstand these tariffs, right?
All right.
And it's
explain them to us.
It's pissing me off because you got all these economists out there and you got all these voices that want to say that Trump's going to destroy our economy.
Andy Bustamante says no.
Andy says no. The tariffs have nothing to do with generating tax revenue. That's what we tell everybody they're supposed to do. Because if, like, at an elementary level, we all understand tariffs cost money. Tariffs earn money. So you got to give that to the 80% that don't understand the real purpose of the tariffs.
That's right.
The actual purpose of the tariffs is because now, by inflating everybody's expenses, you have artificial leverage to get what you want, because you can say, hey, if you cooperate with me, I'll take your tariffs away. Does that make sense?
Yes. 100%.
Anybody who's ever bought fucking jeans that were on sale or shoes that were on sale understands this. The shoes that you buy don't cost $150 to make. They cost like $25 to make. And then the price is artificial. So they can say your $25 pair of shoes is worth $150, but today they're on sale for $70.
Yes.
And then you go out and you buy the fucking shoes.
Yes.
That's all these tariffs are. He's just inflating the prices everywhere to get everyone to acquiesce to his demands to lower the tariffs. You're seeing it in India. You're seeing it in China. You're seeing it all over Southeast Asia. You're seeing it across Europe. People are bitching about it, but that's exactly what it's supposed to do. It's basic economics based on Porter's 5 principles of power. He's just executing it as a gut. That's what Trump.
What do you think? Make sense? Logic?
Okay, so yes, it does make sense in the short term. Like, yeah, like we're getting all these companies to basically capitulate to us, bow down to America. Great. If you think that that's how you build long-term relationships with countries, go right ahead. Be the strong man in the room that, is basically going to do stuff like this. But if there's one thing that you have to realize, is that you're breaking down the stability of trade relationships while you do that. So now what ends up happening is a lot of countries, they're going to be a lot less dependent on the US for trade. They're going to say to themselves, like, wait a second, like, if we cannot be in a position where we're so dependent on the United States that we end up causing our own economies to basically be held hostage by the next president. I mean, Donald Trump has basically said, you know what, the old status quo, the world order is over. This is the new world order. And the thing is, that provides an avenue for someone like the Chinese to come out there and say, you know what, the Americans, they don't live by their word. The next guy comes in, he might tariff you. The guy after that may take the tariffs off. The one after that can go up. Yeah.
To push back, would I hate Levi's the brand if they do the same thing where they put a sale and then they take the sale off the next day, right? Like, do they lose me as a customer just because they're using that as a gimmick?
Yeah, of course. Look at JCPenney. I'll give you an example. Look at JCPenney. JCPenney tried to do this under Ron Johnson, where, JCPenney had a business model where they were doing coupons and everything else. And Ron Johnson came in and said, no, we're not going to do that. We're going to do, just straight up, like, people coming in and getting the best price, whatever. And the thing is, people were not used to that. People didn't like that. They switched off from it. So a lot of countries on the planet right now, in the short term, they will acquiesce to the Trump administration. There is no doubt in my mind that they will come out and they'll make a trade deal with the US just to get the tariffs out of the way. But if you're telling me that they're not figuring out, like, okay, how do we move away from using the dollar exclusively because they can leverage that dollar to screw us over? That's not good. And that means that dollar primacy in the future may not be a thing. And if the dollar loses its primacy, we could be in for a different world. I mean, I still continue to believe the US is going to be fine, but I mean, this is what Buffett even said during the Berkshire Hathaway annual meeting, that, there is an innate need for a lot of these countries to basically debase their own currencies, because it ends up lending to their growth and short-term goals. But long-term is what you should be looking for, making sure that the US remains like the arbiter of of power, so that this way people have confidence in the dollar and
So
stay in the dollar.
would you say if we actually show substantial concessions from our biggest trading partners, it is worth the hiccups of the American brand? Like what can you give me an example of what concession could we get where you would be like, you know what, fuck it, whatever we went through in April, it was worth it because we got that from China or India? Is there anything in your mind that could cause
I think one of them is, and I think this is the one. I'm not sure about China and India as much, but with regards to the Europeans, getting them to take care of their own national defense, I think is a really big deal. You know, the one thing that and me being in the former in the military, I can tell you, it sucks to be the one guy that has to police the entire planet. Anytime there's a conflict, everyone looks at America. Hey, America, what are you going to do about it? Like, even if it's in the Europe's backyard, they look to us to basically do all the heavy lifting. And it's like, no, you can't do that where we're the only ones that are spending, and we're spending with deficits. You know, and literally right now, I think that we're going to be spending 1.1 trillion on the military this year. I mean, that's all being put on the credit card. Okay, America's credit card. Like, I know a lot of people will be like, oh, you know, we have the most powerful military on the planet. But if you look at any example, like look at ancient Rome. Ancient Rome, if you look at their like currency, it went from like having a certain level of gold and silver to literally being made of like cheapest materials on the planet, because it ended up becoming worthless. Right. Now, the thing is, when it comes to defense, of course, national defense is a very, very important thing, but you don't do it to the point where you're going to bankrupt the country. And it's like a house. Like right now, if I wanted to buy a gun, yes, it makes sense to buy a gun, maybe a shotgun, yes, but I don't need an entire armory and say, look, being home safety is one of the biggest priorities, and I'm going to make sure I'm armed to the teeth. Like, no, I also have to make sure that I'm making sure my credit card isn't going to that level where it's loaded up with just nothing but guns, you know? So I think countries have to operate in that way too. And I think the US, because it's been so generous with its military spending and basically providing the Europeans with this, you know, like innate shield that they can always count on, it's basically said, you know what, Germany, you don't have to spend money on the military. You can spend it on your social programs. You know, you could spend it on healthcare, and then people in Germany will be like, look at these stupid Americans. You know, we have free healthcare. You guys don't have healthcare. You know, why? It's like, because we spend our money on defending you motherfuckers. You know? So
defense spending would be the biggest thing you think we could get out of all this.
I mean, this is the part that I once again have to be critical with the Trump administration, which is, you know, there are certain areas of the budget that they're planning on cutting, right? Like Section 8 vouchers, like they plan on cutting a lot of that and making sure that there's a pipeline of people that eventually get off of Section 8, right? So there's a savings there. But at the same time, if you're just going to take that money and blow it on the military again, it's not worth it. And I'm not saying don't spend money on the military. I'm just saying cut back to a level that makes sense where you're not going to bankrupt the country. You know, you have to have some level of defense spending cuts. You have to also do entitlements as well. Like, I'm not saying like, hey, you know, we should just boost up Medicare, Medicaid, and the other parts of it. No, you should control spending on all levels and get them to a point where they're a line item on your budget that makes sense, where you're not gonna end up defaulting. You know, so if you look at the percentage of GDP that the United States spends on Medicaid, Medicare, it's gone like up and to the right, you know. And I'm not talking about total dollar value. Total dollar value is insane, but the bigger challenge is our GDP. It's become such a large part of our GDP that now we're getting to the point where it's unsustainable, you know.
I want to show you some charts and some stats, and then we'll end it out in about 15 minutes. But thoughts on this? So, foreign money left in April. You can see right there on the circle. It's coming back in May. Do you think we get a lot of the people that went to Europe and China and Japan come back to the States based on this potential China deal?
I mean, one of the great things is there's not a lot of places you can put the money outside of the United States that makes too much sense. I'm sure that there are going to be short-term moves where, you know, like some of the money is going to flow into Europe. And that's what we saw, right? We saw the German DAX is doing really well. We saw China doing well as well. Like China's been doing well because they're stimulating at the same time. So you've got some investors moving money there. You've got Japan that's there. But U.S. economy is still the most dynamic economy on the planet. and we're still, doing everything in our power to be the most innovative country on the planet. So in the short to medium term, there's not a lot of other places where you can park your money and feel safe. So at least that's one of the benefits that we have. So yeah, there's definitely going to be some money that comes in. What's going to be interesting is what part of the asset class is that money going to go towards? Like one of the things, if you look at Canada's had huge amount of price increases in their housing. But one of the reasons why is because there's just been so much foreign money getting dumped into some of the major markets in Canada by China, by not China like the government, but Chinese investors, because they felt that it's more stable to be in the Canadian property market rather than being in a property market in China, so.
Yeah. Okay, here's another chart. Buybacks are set to blow past 1 trillion for the first time ever in 2025. Is this a good thing? Is this healthy, or is this individual companies propping up the market?
I mean, for stock investors, it's definitely a great thing, but buybacks can be, if done correctly, buybacks can be value accretive for shareholders, but if done incorrectly, they could actually be, pretty destructive to a company's balance sheet as well. Right. And we've seen this happen with multiple companies where during the profitable years, they insisted on just buying back shares, and they buy back shares at inflated values. And so as a shareholder, you basically lose out on, on that. So imagine right now you've got, basically, let's say in the future, your business model gets disrupted. You don't have that excess capital now to deploy into pivoting, because your entire idea was, oh, we'll just buy back shares. Right? So it depends. Buybacks are a great way to return value to shareholders and boost up your stock prices, and I'm all for it. But once again, if you're in an industry where you're being slowly disrupted and your market cap is basically gone to shit, don't do buybacks, and especially don't take on debt to do buybacks. Does that make sense?
I agree. I mean, if you're Google and you have the cash, then
yeah. See, like Google with its tremendous cash flows and valuations being so low, it makes sense for them to boost up their buybacks. And it's the same thing with Apple. Apple generates so much cash flow, and the thing is, everyone's like, oh, well, why doesn't Apple invest more in like other like innovative things, right? And Apple's like, it's not really like something that we want to try to do. Like, we've spent money on the goggles, and where did that go? We spent money on the Apple car, and what happened to that capital? We would have been better off just buying back those shares.
Yeah, that's fair.
So, yeah.
We got someone backstage who's joining the party to help us analyze what's happening in the equity markets. Steve, what's up?
Steve, what's going on?
Nothing. I just woke up.
Really? You just woke up?
Our buddy Ken called me at 7 a.m. today.
I saw.
Wait. Before all of this, Steve, what is why can't you get a better camera, man? Like, you told me you got a Logitech. Like, come on.
I just got a new camera.
Dude.
Yeah, I know. Look at this camera, bro.
Steve could look like a potato, and people would listen for hours. That's the magic of Steve. Look at the chat. They are going crazy because you're here.
What's wrong with the camera?
I don't know, bro. It looks like you're still in like what in the 2005, 2006 with the Logitech, the ball camera.
It's a 4K camera. I don't know what to tell you. I probably have the settings wrong.
It's definitely not 4K, but I love you regardless.
100% is.
Okay, it's probably lighting. You know what? One day, Steve, when I'm in New York, I'll come on by and I'll get you hooked up. You'll get a much better like visual and maybe some audio stuff too.
I will
like,
take you in a minute out.
This is how much Steve doesn't give a shit. He was on the Market Open 2 days ago, right? He's talking. I hear a chop, chop, chop. I'm like, what are you doing? He's like, oh, I'm chopping some onions. I'm like, you're in front of thousands of people. They want to hear what you have to think about Google, and we just chop, chop, chop. He doesn't care, and people still love him. So it is what it is,
I was hungry.
I know. We ate the onions with you. So
I was hungry. What can I say? So Ken calls me at 7 a.m. on a Sunday, and I didn't go to bed until 2 last night. So I just took a little nap. when I get back from my parents, and
Wait, why didn't you go to bed till 2?
because I was watching Succession again.
Again?
Yeah, I started watching Succession again.
Wow. That's it's impressive. I gotta start that
Succession's
show.
a good
one day.
TV show, not that you would know about it.
Dude, I took some NyQuil last night. I slept at like 7 p.m. I woke up at 8 a.m. I think I slept for like literally 10, 12 hours. It was great. So I think I really fixed the cough too, hopefully. So
Hopefully you did.
Steve, futures are mooning. Looks like we got a trade deal with China. What is your raw reaction?
Did everybody's quant do it again? I mean, somebody should just come out with a T-shirt with his face and just say, "This is my forever quant," or "This is my 4-year quant." At this point,
We have to have your face on it, right?
no, definitely not his face. I mean,
Who? Basent's face? Whose face is on it? Trump's?
I mean, think about what he said. I mean, he's been calling it the whole time.
Who? Trump?
Trump.
Yeah.
Buy stocks. They're going a lot higher. I mean, what president has ever said that?
Dude, he's really stretched the limit of what you're allowed to say as a president, because you would think if Obama said that or something, but like, no, you could say it, I guess. No one cares. So, okay. Is there any hesitancy you see in the market gapping up this aggressively? Like we're at the 200-day on the S&P, or you think this is just...
I'd like to see what the actual full deal is, but no. Just think about it. The three of us were on a stream on a Sunday night when the S&P was at 4,800. I told you that was the low.
You did.
I don't know if it remains like this tomorrow after the announcement comes out, but even if tomorrow's flat or it retraces a bit during the week, I do think the bottom is in. And I do think that corporate earnings are showing that the largest companies are still very strong. Big cash flows, buying back shares, increasing dividends. And I'm not worried. I wasn't worried during the whole time, and I was willing to accept a couple of months' pain. I mean, at this point, let's see where we go. Where's NVIDIA at right now?
Well, don't say we're not worried. It depends. I'm telling you, you got to be sector dependent now, right? I mean, look at pharma. I'd be surprised if pharma remotely gets any bids tomorrow, considering how big of a
Hims is
sea
going
change
to do
they
with
had.
the pharma news.
Dude, Hims is up 6%. Hims doesn't care.
How is Hims up with that news?
Because Hims is him, bro.
No, I guess
they do generic. They do generic. They're not. Look, Hims does not do any R&D. Okay, they don't go out there and say, "Let me find a drug for Duchenne's muscular dystrophy" like Sarepta does. They have no capital spending on that. What they do is they make pharmaceutical products that are a lot of generic stuff, right? But that basically are just consumer facing. They do a really good job of marketing those specific things to people. But like I said, they're not going to be impacted by this. Like, okay, here's an example. If you are a pharmaceutical company, you spend 5 years researching a drug, and then you put it out there and you put it for $800, per 30 day. No, per 30 day. Yeah.
Is that I would think the entire sector, including Hims, because now there's a cushion, like there's a built-in cushion or maybe cushion's not the right word, but there's a built-in ceiling of what you're going to be able to charge on everything at this point. So wouldn't Hims get affected with everybody else?
No, not really. It actually would open them up, because now you don't have to go directly to the manufacturer and get it, pay that crazy amount where you're getting barely any margin. Now, if let's say India is charging, or I don't know what, first of all, I don't know the legislation that he's proposing, but let's say in a foreign country, you have a drug that's only selling with $10 a pill, Hims could sell it for $10 a pill also, and not have to worry about all the additional money that they would have to pay the original patent holder.
Right, but this isn't reducing the patent time. This is just saying that you can't sell it in the U.S. for less than or more than you're selling it overseas.
Right, but that also opens up Hims to be able to kind of take that, basically sell that product for that cheaper value. So it brings it widens the breadth of what Hims could sell, basically. Making
Look, I
making it
think
more
Hims
profitable.
is. I couldn't find a single thing wrong with Hims when I dissected it. I really think it was undervalued the other day.
I mean, look,
Well-
one of the biggest benefits to Hims is going to be when these GLP-1s go into generic, which is a long time away. But yeah, I think Hims is going to be able to market themselves. They've got a consumer base that's pretty loyal. It's got a lot of shares shorted though. Shit, that's going to happen
incredible.
tomorrow.
And I think their testosterone line is going to do well. I am very big on the testosterone line. I think that is, for all the companies, going to be as big as GLP-1s.
You think there's a shortage of testosterone in the country?
I think that when you look at the studies, and if it becomes normalized for males to get back to testosterone levels from when they were in their 20s and early 30s, I think you're going to see a large portion of males start taking it, because the research, my doctor won't let me go on it. I want to, but when you do the research, bring it up. Bring up a table of when males start seeing lower levels of testosterone and find a chart of how it plateaus. This is going to become such a big thing if it's easy as a pill rather than having to get shots every 2 weeks.
So I don't have a chart yet, but wait, no, I do. Do I have this chart? Okay, here it is. You are correct. It definitely goes lower over time. It's declining about 1% per year if you're 44 and up.
Yeah, think about how many males that is.
Mm.
And that's just averages.
Yeah, that could be a big vertical for them. By the way, guys, Bitcoin 105. There she goes. There she goes.
That's surprising. Now the direction of BTC is broken. The trend with gold. Gold is down. Bitcoin is up.
Gold is down. Bitcoin is up, dude. Gold down 2%. People are saying, screw this shit. I'm going to digital
Bitcoin
gold.
gets to just over $1 million. It'll have a bigger market cap than gold.
It already has a bigger market cap than Amazon right now, I think.
Yeah, pretty soon Microsoft.
It's Bitcoin. It's freaking Bitcoin. I love it. It's fun to see. It's fun to see.
Insane.
How about Meta?
How about Meta?
How about Meta?
Well, no. I think the conversation we should be having outside of Meta, because everyone knows Meta is doing great. The conversation here is, and let me put a poll right here in the chat, is Google cooked?
No, it's not cooked. I want to show you a chart real quick.
Let me put that poll right here.
Google's cooked from a valuation standpoint in the short term.
Dude, if Google's not cooked,
not giving it value.
If Google's not cooked, this has to be the easiest buy in the market. If it's not cooked, this has to be the easiest buy in the stock market.
Yeah.
If it is, then maybe not.
So I actually this just got released. I just released this about an hour ago on Seeking Alpha, but Meta's buyback program is so strong. Its capital allocation program in Q1, they did over 17 billion in buybacks. I mean, this is incredible.
I'll put the article right here in the chat. I mean, look, you've been a Meta bull since IPO, so you.
I do think Meta's going to 800 by the end of the year. I really do. I think it is such an undervalued AI play, and they're going to be able to unlock so much value. I mean,
well, Meta, hold on. Meta doesn't go to 800 unless the S&P gets to 65, 6,700. Like, I don't see that happen. So you got to be bullish markets if you're bullish on that.
I mean, I'm bullish markets, but I'm also bullish Meta at 18 times 2027 earnings.
Yeah.
With the amount of growth that they have. And here's the big thing about Meta. They could expand margin significantly with AI, and they are going to drive value for all of their customers through AI. I think that people are looking at NVIDIA, Palantir as the winners in AI, and I'm not saying that they aren't because they're going to do great, but Meta is a sleeper on AI. They really are.
Dude, and WhatsApp hasn't even started in terms of making money.
We haven't even seen WhatsApp monetization, and we haven't even seen what the glasses are going to really do in the next couple of years and how much better Reels and everything else with the Meta platform ecosystem is going to be.
Okay, so here's a question. NVIDIA 200 or Meta 800 first? Put in the chat. Which one do you think first?
Meta 800 is probably more likely.
Why?
Because Meta's all-time high is 710 or 720. 740. I don't think it would take that much more to go to 800 for new all-time highs, whereas NVIDIA tapped out at 156.
Yeah, very much.
And the amount of market cap that they would need to add to get to 200, I think Meta 800 happens first.
You know, Meta 800 happens even quicker if they split this damn stock.
Zuck needs to split the stock.
I could buy 100 shares and sell some calls against it. You know, it's just a little easier for me.
He needs to do a 10 for 1, same way Amazon and Alphabet both did 20 for 1. But Zuck should do 10 for 1 immediately.
Okay, well, Hims get to 100 before Meta gets to 800.
Hims could get to 100 in 2 weeks at this rate. It's crazy. But let's go to your Alphabet question, because I think that would be a good discussion.
Okay, Chris, let's have you start with it. Is Google cooked or not, Chris? What do you think?
No, I think they're fine, man. Google still makes a crap ton of money, you know, and they're buying back shares right and left. They've got multiple business lines right now that are growing at a fast pace. So even if search, let's say, isn't growing as fast as it was in the past, you know, and their ops cash is not growing as much, it's like a melting iceberg, which is going to last them probably another like 10, 15, 20 years, you know. And look at this.
Really?
Google's not even
20 years. You think 20 years they have no issues with 10 blue links?
I don't think so. I think Google still has other ways that they're going to incorporate search and AI into search and everything else. I will say this, like my utilization of Google sometimes has gone down since I started using.
Okay, so hold on. I gotta stop there because
Mhm.
everyone says I'm using Google less, but then everyone is still bullish Google. How do we reconcile that?
Well, that's because
what's happening?
because this is like what I said on your chat. I said when I look for things on Google, I don't just like, okay, my past interaction with Google was I would search for information, type it in, and I would get it. But it depends on what I'm searching for, right? So I would be searching for, you know, who was the 5th president of the United States. Google's not going to monetize that. There's no value in monetizing that, right? Like that's just something that just queries up. But if I'm looking for, let's say, a flight from Atlanta to New York, that's huge monetization potential. Yeah. I can't go to ChatGPT and be like, hey, give me, you know, the flight from there. Like, no, I still go through there. I find the flight, I look at it, I visualize it, and I end up getting the revenue from, you know, and Google ends up getting the revenue from that click. So once again, unless you don't incorporate
think agents attached to Siri are just going to book your flight in 2 years?
I don't think so, man. I mean, maybe, but I haven't seen that utilization just yet. You know, if it becomes so natural, I'm still one of those people that like to see things on my screen to compare. I'm not so sure how you can just tell an agent, give me the 5 direct flights from New York to Atlanta. And now it's like reading everything off to me like, oh, you could go with Spirit and you could do this, you can do it that. Like, no, I just want to see a clean thing right on my screen. And it takes 2 seconds for me to do it on Google. Not to mention you've got Google Maps, you've got all the other services that Google has. So no, I'm not worried about that.
I want to share my screen.
Okay.
So I'm with Chris on this, and let's look at the first one that I'm hovering over, Google search. This is a quarterly chart of its revenue. I'll make it a little bigger. And I've been hearing search is dead for a while. And search is not dead. I mean, if we actually look at the numbers, they increased year over year by almost 10%, $4.5 billion. Okay. Search keeps going up. Every year, it plateaus or it makes a new high in Q4, falls in Q1 a little bit quarter over quarter, and then accelerates throughout the year. And that's happened every year for the past several years. So the whole ChatGPT thing was what, Q2 2023? So they were at roughly 43 billion in quarterly revenue then, or we could see it right here. Yeah, 42.5 billion revenue. Now we're at 50.7. I mean, it has still gone up. I mean, we have a year and a half of data and it's not cannibalized. Now, even if search plateaus or starts to decline, Google Cloud is a rocket ship, almost 30% year-over-year growth in Q1. YouTube ads is following the same trajectory as Google search. You still got Google Network, you got subscriptions, which if subscriptions becomes a bigger business, that could replicate what Apple services is in time. We don't even see Waymo in here because that's part of other bets, which they haven't even really begun to start monetizing yet. The sum of the parts for Alphabet is so much bigger than what the current valuation is. And I just don't see how anybody can say that they're not going to figure it out. This is a company that is getting penalized for something that may or may not happen when all of their data shows that they've been dealing with Perplexity, ChatGPT, Grok, Llama for the past year or so, and they're still growing. Not to mention, everybody is acting as if they're not going to figure it out with Gemini, or if Gemini is not even going to be a player. And when you look at how some people are saying tokens is going to be the future of what it's going to be, I guess, the equivalent of gas fees or something like that. But you go into 365, you get tokens when you have a subscription, and you use those for ChatGPT. I just don't see how Gemini is going to be worthless and how they have this type of cash flow, this type of balance sheet, and we're not going to give it any respect that they're pretty good at figuring things out. I just don't see it.
I think I largely agree with both of you. I think there is that headline valuation concern as a narrative. That's why it's trading the cheapest out of all the Max 7. But
they also have litigation issues too.
Right.
Let's not discount that. Like that's one of the other challenges that they have. Like if they didn't have the litigation issues, this could be at least another 4 to 5 PEs higher. Right. So right now it's 18. It should, if it didn't have the litigation, the Google breakup, the ad thing, it would probably be around 22 PE, maybe 25. If things were really up and working. My other thing with Google though is that I think this year they're going to be spending a lot of money on CapEx because they are really leaning into this AI thing. But if you know anything, Google can dial back that CapEx, and all of that additional cash flow can go into like things like share repurchases for them, right? So you're talking about right now, this year they're projected to do $75 billion in CapEx. Okay. I'm sure that eventually that's going to moderate and probably come down to a more manageable 50 to 60 billion, which leaves them another 25 billion in share repurchases. And at the current valuation, dude, they're already doing 65 billion in share buybacks. And next year they could trigger to like 75, 85, maybe even 100 if it becomes really, really worth it for them. In which case for shareholders, you're literally retiring 5% of the float every year. Like, that's insane amount of float that's getting retired.
At some point, buybacks matter. It gives you huge yield, and it spikes EPS because the earnings are shared across a fewer amount of shares. I mean, that's why Apple was able to increase in value when it had negative revenue growth.
Yeah. Like, look at Apple right now. If you look at Apple's revenue, it's like this. But if you look at the stock price, it's like that. Now, how does that happen? Well, that's because you do massive amounts of
buybacks every year.
Yeah, and you boost up your EPS by a crazy amount. So if you look at Google's price, like I did some calculations. Google's EPS right now is very understated, especially when you consider how much of their shares they're buying back at current value, at current prices. So
which do you have over the next decade? Meta or Google?
Have both. Why
no, but you got to pick one. You got to pick one. Which you pick?
No, I don't have to pick one. I can.
No,
pick
you
both.
do have to. That's the question.
Well,
don't be a bitch.
Picking
pick
both.
One. Don't be scared.
I'm
pick
not.
One.
Well, I'm picking both, bro. Why?
Dude, you got to pick one, bro. This is what we do as analysts. We analyze.
Nah, I think it's 50-50. That's
Dude, you don't want to say Meta. That's why you're not saying which one you
I'll
pick.
play a game.
You don't want to say Meta, Chris. You're hesitating to say Google. That's the issue.
While I think Alphabet is a tremendous value here, if you told me that I had to invest in one right now for the next decade, it's Meta.
Yeah, they're not being
I
disruptive,
agree.
so.
I agree.
Yeah.
Hands down.
And let me. I'm not saying it because of like Monday morning quarterback Google's, because Meta just doesn't have the search risk. It's just that simple. Meta just doesn't have the search risk. That's it. That's my answer for Meta.
So
like, we have to hope Sundar figures out this search stuff, which I think he will.
It's different.
But
Meta's got different verticals that I think are going to be so exciting, and they have something that Alphabet doesn't have. They have 4 billion users using their products every day, and they have a moat that cannot be destroyed by anybody at this point. No matter how popular TikTok got or any other platform got, it hasn't stopped the DAUs.
also,
And-
Zux is a killer compared to Sundar. I have a lot of respect for Sundar, but
Look at who's on the board now. Dana White. I am telling you, in the next year or two, you are going to see them break into real VR sports with the UFC. And I think that's going to get parlayed into every other sports league. I really do. And I think we're going to see a whole new era of live sports. And I think it's going to be huge for Meta. And Zuck is hell-bent on owning the entire vertically integrated ecosystem because he despises Alphabet and Apple with having to pay them so much money. And if he pulls this off, he's going to have not just the iPhone, but the App Store also for the next platform. And nobody can touch him.
The reason I bought Google this year over Meta is because of the valuation. Google was just ridiculously cheap. But there's a reason why it's cheap. There is a big risk to 10 blue links. You could say the risk to Meta is people don't use Facebook, but we've been saying that for a long time.
That's not even true.
Yeah, a lot of people still use Facebook.
I mean, bring up Meta's Q1 numbers. Look at the beat. Like, this was such an incredible quarter. I mean, they generate $6.43 in EPS, and it was a beat of $1.22 off the consensus estimates. Like, they blew the doors off Q1 earnings.
Yeah. The one thing I'll give to Zucks is that in terms of operating his business, he pivots like there is no tomorrow. I mean, he fucking fired a crap ton of people when, that whole thing was happening in when they were, down. He was just like, no, these lazy ass people are not doing anything. Get them out of here. He pivoted. They did reels. They did threads. I don't know how much money they're making on threads, but the guy will copy. The guy will do everything in his power to make sure he gets value for shareholders. You got to give that ruthlessness to Zuck.
Look, I don't want to see anybody lose their jobs, but at the same time, you got to think that they're going to either create efficiencies or keep the headcount where it is. How much more efficient is this company going to get with AI in the next couple of years? Not to mention, what is the value proposition that and that's one of the things I really discussed in the article about where I see the value proposition for their customers, because how much better does targeted advertising to the demographics get with AI? And nobody else is going to be able to fill that void.
Well, here's another thing, Chris, you've been talking about this, but could Meta get into the cloud computing space?
I think so. I think they're invested so much in the models. I think it's worth it for them to just say, you know what? Here's a few data centers. I think they're building the largest data center on the planet, actually. Just look that up. Meta largest data center. And basically they could just say, you know what? We've got excess AI compute, sell it.
I mean, dude,
Right.
if they start competing with GCP, AWS, and Azure, they're going to be a small competitor. But if they take away even a percent of market share, that's a big deal.
I mean,
ironically, I Googled that.
Cloud is going to go for the next 50 years, dude. There's going to keep growing. There's no way, literally everything is going to the cloud. Okay. And the thing is, I don't ever see a future where it's like, you know what? We've got enough storage. We've got enough compute. We don't need any more compute. We don't need enough storage. No, it's like this everlasting, I don't know how to describe it. It's almost like, it's like burgers, can you really have too many burgers? Can you have too much soda? No, it's just, It's going to keep
So,
people are going to keep
Chris, think
consuming
about
it
like
more and more.
this.
Yeah.
And I deal with this every day now. We keep storing more and more things in the cloud, and every company that has more, and look, I shouldn't say every, most companies that are not small mom and pop shops of 10 people, but if you have 100 people or 1,000 people at a company, the amount of storage that you're using on OneDrive and in SharePoint is incredible. And you're creating new files every week and you're not getting rid of your old ones. So, I mean, there's a
dude,
stat. I don't know if you can find it, but I think something like 80 or 90% of infrastructure footprint is still on-prem.
Yeah, you're right about that. Amazon, Andy Jassy said that.
No, I mean, look, compute is going to get cheaper, storage is going to get cheaper, but the volume
It's
of
gonna
utilization is going to keep expanding. That's the point, and which means that they'll be able to get higher and higher margins. I mean, think of any application that you've ever worked with. I would say for me in my organization, 90% of them are cloud native now. Any new application that we're getting, they give you the option. They're like, hey, we can do on-prem, but then we've also got cloud, and most people would just say, okay, let's go with cloud. So,
Chris, are you buying Apple here?
No, I'm good. I'm not really an Apple fanboy. I think Apple's biggest challenge right now is with the Epic Games decision that they have a competing app store. They're not necessarily growing their top line nearly as much anymore. So yeah, even with the share buybacks, I think Apple is a great company, and I think they still have the potential to grow in India. But Apple is like the value play, I think, for most people. But the only thing is, it's also trading at a really high multiple. What is it, a 33 multiple right now for Apple?
It's way lower than what it was 2 months ago.
Yeah, that's what I'm saying. It's lower than that, but like with Apple, I would be comfortable paying maybe like 17 to 22 PE for it.
Yeah, but would you realistically get that on Apple?
I mean, depends on your time horizon.
Especially with this China deal, which was bought, would anyone actually get 17 times?
That's what, on Apple?
Yeah, that's like worse than April 8th. That's like 2022 levels.
Let's take a look. Hold on.
I have it if you want it.
Yeah, go for it.
75% of the chat said no on the Apple poll.
Yeah, the other major problem that Apple could run into is Google, actually, because if let's say the lawsuit comes out and says Google can't pay Apple to be the default search engine anymore, that's a huge hit. I think that's like a $20 billion hit to Apple, and all of that is just basically free money for Apple right now, right? So that could be a big thing for them. Big loss.
Steve, can you zoom in? So we're looking at Apple's trading at 22 times 2027, which is more expensive than Google, Nvidia, Meta, Amazon, and Coke.
See, the thing is, like, Google should eventually get back to a 20 PE, especially on a forward basis. A 20 PE on forward. What's the EPS that you gave Google? 11.65. Are you sure you don't want to? Are you sure you don't want to raise that up?
I'm just going with what the consensus estimates are. I'm not putting in my own numbers. This is all consensus estimates.
I think they're going to do about 10% more than that EPS from what I'm getting.
And and Meta's growth is a lot less than what it was a month ago, because the 2025 estimate shot straight up after they blew out Q1. Yeah. Because they were only estimating about 2281 before.
I'm getting about 13, between like 12.50 and 13 on Google for EPS for 2027. So,
Chris, when are you buying Nvidia? I think that's the real question here.
I don't need to buy Nvidia, dude. I've got money parked all everywhere right now.
This is why you need to buy Nvidia. Let's listen to this real quick. Let's listen to this real quick.
And next, we can also apply that to much more complicated robots like the humanoid. And these humanoid robots, they went through 10 years worth of training in only 2 hours of simulation time to learn walking. And then you can transfer that. And it doesn't matter what the embodiment is. As long as you have the robot model, you simulate it, and you can do the walking. And can we do more than walking, right? So as we are controlling our body, you can track any pose that you want, track any key point, follow any velocity vector that you want. And this is called the whole body control problem of humanoid. And it's really difficult, but we can train that, right, on 10,000 simulations running in parallel. And we can transfer that 0 shot without any fine tuning to the real robot. So this is at the NVIDIA lab. We actually need to slow down the video. So the first video is in real time, and the next video is slowed down. So you can see the sophistication of the motion that it does. It imitates the human, all these agile motions, while standing balanced. And guys, how big of the neural network it is required to do this? It is 1.5 million parameters, not billion, 1.5 million parameters is enough to capture the subconscious processing of the human body, the system one reasoning. 1.5 million parameters.
That is the head of NVIDIA's humanoid robotics research lab. I mean, just looking at that video makes me happy to be an NVIDIA shareholder because of the amount of sophistication and innovation these guys are attempting to do. Will it be successful? Who knows? But does that not at all, Kris, get you a little bit more excited to say, hey, maybe I'll take a bet on something trading at 26 times?
Yeah, I'm gonna bet on the future collapsing. Bro, those robots are gonna kill us. Why do we keep doing this to ourselves, man? Stop. Like, this is like Wuhan times 10. Like, let's train the robots to learn how to kick our teeth in. Like, why are we doing this? Stop, man.
Steve, do you have a different take here?
So I love the fact that Kris thinks Terminator is going to happen, because I think Terminator is going to happen. And it's been a running joke for like 2 years at this point. But look, I think it's getting very scary about what's going to happen with AI. And this is something you cannot put back in the bottle. So you might as well be invested in NVIDIA and the companies that are going to be on the AI train, because we can't control it and it's not going to stop.
Dude, a robot killing you would have to be one of the coolest ways to die, right?
No,
like in terms of the ways to die, like a robot, that would be kind of cool. Like if you had to pick your death, right? Like
there's this Chinese company that does aerial displays of with drones, right? Like, and basically they make like lights and all this other stuff. That shit worries me more than any other technology on the planet. And I'll tell you why. Because you load that thing up with just a little bit of C4 and you get 100,000 of these things and you deploy it in the middle of a city, bro, that's worse than a nuclear bomb. And you know what? These drones are so cheap. They're mass manufacturable. I think we're going to get, believe it or not, in the next few years, a drone terrorist event that's going to happen in the United States. And that's going to cause a lot of changes to be happen. I mean, you look at the war that's happening between Pakistan and India right now, and literally like each side is just sending drones over to each other. You know, it's going to be one of the hardest things to combat. And I don't know how we're going to do it. So I think the destructive nature of AI is going to be revealed in when you combine AI, you combine drones, and you combine, you know, the cheap manufacturable ability. It's going to change a lot of things.
It's going to be sooner than later, unfortunately. Yeah. I just don't see how it's not going to be. When you think about where military spending is going to go, you have to think it's inevitable that somebody is going to have AI-powered robots fighting for them.
Mm-hmm.
That is where this is going at some point.
Yeah.
But I have a question for the two of you, because I can't figure it out and I keep asking it. Why is the market broken? And I understand the market is inefficient. It always has been inefficient to a degree. But at the same time, why are people still looking at Walmart and Costco as flights of safety, or Coca-Cola or Procter & Gamble?
Because
before I answer that, Steve, you know what movie this scene is from? On screen?
Yeah, it's the great. It's the greatest card movie ever. It's not the greatest gambling movie ever.
I just wanted to make sure because you don't know that much about movies scenes. So I just wanted to make sure.
Right. No, I haven't seen Rounders 30 or 40 times now, of course.
Kris, have you seen Rounders? You've seen it, right?
Yeah, I've seen it. Yeah. Yeah, he's competing against that Russian dude. What's his name? I forgot the guy's name.
Give that man his money.
Give that man his money. He beat me fair. He beat me straight
Mitch,
up.
you know where the sands turn to gold?
I have no idea what the fuck you're talking about. What
It's a quote from Rounders when Worm is talking.
I don't know all the quotes. I remember the Oreo and then like
John Malkovich. Yeah.
A casino in Atlantic City that is no longer there, the Taj Mahal, where the sand turns to gold.
Anyway, your question is why are people buying Walmart?
No, it's just why are these companies still looked at as the bellwethers for safety when they don't have the balance sheets, they don't have the cash flow, and they don't have the growth of half the companies in the Mag 7. And it just doesn't make sense.
What if I can give you a conspiracy theory? What if Walmart, I don't think, not what if, but Walmart is the largest employer in the United States of America.
Yep.
What if the BlackRocks, the State Streets, they know that this company cannot go out of business because then too many people will be unemployed. Most of those jobs are lower income. What if they have to keep it elevated for the sake of democracy and people keeping their jobs?
No, because my question has nothing to do with them going out of business. I'm just saying, how come these are still looked at as the flight to safety rather than companies with cash piles that are 5 to 10x larger, cash flow that is 5 to 10x larger, and more growth? I mean, Meta versus Walmart. Do we even dare look at the amount of cash on hand as both of them and compare the balance sheets? Because I'm looking at the forward growth numbers. Meta's got more forward growth in EPS, yet it's trading at 18 times 2027 earnings, while Walmart is trading at 29 times.
What? Wait, hold on. Walmart's trading at 29 times 2027?
Yes.
There's no mistake in that, right?
No mistake. 29.4 times with 25.5% EPS growth from the end of 25 to 27. And Meta has almost 29% EPS growth, and it's trading at roughly 2/3 the valuation.
And Walmart's not doing nearly the amount of buybacks as Meta.
Well,
No.
look, it's because people don't like the average, and I'm not sure just the average, but people may or may not understand the business model of some of these other tech names, right? Like, so if you go to Congress, right, these guys, they were asking Zuckerberg, like, oh, how do you make money? You remember that? Like, someone in Congress is actually asking Zuckerberg how he makes money. So Zuckerberg's like, we do ads. And the guy's like, huh, really? Like, so
Right.
It's like, oh, people understand, like, I just go to Walmart and I can basically buy things and Walmart makes a profit. So the business model is very easy to understand for the average person. And so when you say flight to safety, they think to themselves, hey, you know what? What's worked in the past in terms of like safety? It's like, oh yeah,
Hey,
Walmart,
you're not
Coca-Cola.
wrong. You're not wrong. It just annoys me. So the balance sheets, these are the numbers. Walmart has $9 billion in cash. Okay, $9 billion. Meta, $70.23 billion in cash.
My goodness.
I mean, the balance sheets aren't even close. Meta has, 28 billion in debt, while Walmart has 35 billion in debt. Walmart's got more debt.
We should do an exercise. Ask your mom. Mom, should I buy Walmart stock or should I buy Meta stock? And see what she says.
My mom's on Instagram all day, so she might actually pick Meta, but it's a
No. Ask her. She's just, never been in the market. She doesn't do PE research. She doesn't do operating cash flow. None of that stuff. She just looks at two companies. So just ask her, like, hey mom, which one would you rather buy?
I'll ask her.
And see what she says. And go from there. First of all, I don't even think she even knows what Meta is, to be honest. I know she'll know what Instagram is. She knows what Facebook is, but she doesn't know what Meta is.
Most people don't.
This is going to be my next big X post, because I'm going through the numbers getting angrier, because Walmart in the trailing 12 has done 36 billion in cash from operations. Meta has done 96 billion.
I was going to say it's probably 3x. Yeah.
Meta has repurchased $43 billion worth of shares. Walmart has repurchased $4.5 billion and paid out $6.7 billion in dividends, whereas Meta has also paid out $5.1 billion in dividends.
My conspiracy theory looks smarter and smarter from here.
There's just, when you look at the actual financials, there's zero reason for Walmart to have a higher valuation or bigger multiple on their earnings than Meta. There's zero reason for it.
It's so funny. Someone's like, we have stalwarts like Fart Coin. Like, bro, before we try to justify why people are buying Walmart stock, we should figure out why people are buying Fart Coin stock.
You're not
wrong. Not stock.
It is so annoying.
No, but Steve has a real point. Your broader argument is, why is the market being that inefficient?
It's so inefficient. The information is readily available, and I just don't understand why there's not a fundamental shift, because I got news for everybody. Meta is more recession-proof and more tariff-proof than Walmart. Because guess what? When a recession hits and economic slowdowns occur, people tighten their belt on spending, and Walmart is impacted by discretionary spending declining. Okay?
You know what?
Meta,
maybe the thesis that
companies are cutting, because that is their targeted audience. And in times where economic recessions happen, it's even more critical that they reach their target audience.
The thing is, I think some of the comment section is right. When it comes to Walmart, it's like, your 50s, your 60-year-olds, your 70-year-olds, they're not trying to know what Meta is and all. So they're like, look, I've got some money coming in, and I've been buying Walmart stock for the last 20 years, and it's done well for me. So they just keep buying it. Like they don't see anything.
How about Amazon? Let's get off of Meta. How about Amazon?
It's the same thing. I'm telling you, a lot of older people, like especially in their 50s, 60s, 70s, they're just regular buyers of these standard companies. They're not looking at the next big tech company. They're not looking at any of these things.
Yeah, but you could say that Amazon is probably just as well known and thought of as Walmart, considering it's the largest e-commerce platform. And Amazon only has $94 billion in cash on hand.
Look, Steve,
your operations is only $114 billion.
Steve, you're a real investor who looks at real fundamentals and real things. Most people in the market, like especially like who are just buy stock, they don't look at these things. Okay, they don't look at the fundamentals. They don't look at you ask someone, like you ask my mom, like, Mom, what's a PE ratio? You think she's gonna know? No, she's just gonna say, I go to Walmart.
Even then, Chris, she would still pick Amazon over, like, that brand is way more ingrained than Walmart.
No, she would pick probably Kroger, because she goes to Kroger all the time. Like, she's not gonna pick Amazon. I'm telling you, people buy what they see.
What Kroger needs to do.
People buy what they know, right? And that's the Peter Lynch way of doing things. Also, if you remember, Peter Lynch, just buy whatever you use, and so people, they go with it.
I do agree with you, Steve. It is insane that Clorox, Costco, Walmart, they trade at these multiples. And I think it's more of a concerted effort to not give big tech the continued momentum it had for 2 years. And I think maybe it's I don't know why, but there's been a rotation out of big tech.
And like I showed you the other day, the fact that Apple, Microsoft, and Amazon are the 3 largest stocks in the Spider Value ETF, to me, is a problem. Like, how is Amazon a value company when it has 44% EPS growth from the end of this year through 2027? How is that a value company? That's still a growth company.
Not wrong.
This doesn't make any sense.
Yeah, the others in that ETF are Berkshire, Johnson & Johnson, P&G, UNH, Exxon, Coca-Cola, JP Morgan. So,
okay, P&G, cool. Bring up my screen. I'm just going to put these two next to each
look at Exxon. Exxon's gone where? Exxon's done what?
So you said Procter & Gamble is which position?
Procter is number 9 out of 10.
Okay, so Amazon, according to the Spider Value, is a bigger value company than Procter & Gamble. This makes no sense.
Well, if it doesn't make that much sense, then it's giving us a great year to buy big tech, right? Like, it's got to be.
Amazon, I am telling you, is on sale. I've been saying Amazon's on sale. It is such deep value here. It should never be trading at this multiple. And then when we throw Walmart in there, I'll bring Walmart down and Costco, my two favorite to bash because it doesn't make any sense. How Amazon's trading at these levels compared to Walmart and Costco is a sin. It's a
Yeah,
sin.
but we'll take a look at this chart real quick. Look at this. This is Procter and Gamble. So if you're telling me someone who was buying Procter and Gamble in the 90s and what it is now, they'll never give up Procter and Gamble.
No, of
They'll
course
keep
not,
that shit
especially
to
with
the
how
end of the
much the
day.
dividend has grown. I agree with you.
Yeah, yeah.
Bro,
So that's
this,
the thing. I think. Yeah.
this
Go ahead,
chart
sir.
is going to be us like in 40 years when we, with our Meta and Amazon, like we're going to be the old guys with like, oh, I bought Meta back in 2025. Like someone saying I bought Procter & Gamble back in 1980. Like that's going to be us in 20
Yeah,
years.
like look at this. Like in 1985, Procter and Gamble was $3.57. Okay, and I'm sure that this doesn't even include all the dividend payments that people have been getting. So literally, they bought this. Like I was born in '85. Okay, so it's been 40 years. Look at this. $3 turns into 157, and the entire time you're getting dividends. You're getting this. I mean, you know, it's funny. I was actually, me and the wife were looking at houses today, and most of the people that were coming in, I think there was like one maybe young couple, but most of them were just like boomers. Boomers were buying houses. I'm like, what is this boomer buying this house? And I'm like, this motherfucker probably owns Bitcoin. But now I think about it, it's like, no, they probably bought Procter and Gamble in the goddamn 80s, and they got that monster dividend payment coming in, you know?
Or they're
why are
moving
you-
to New York.
Why do you want to buy a house right now? You want to put a down payment or you want to buy stocks? How are you thinking of that life move for you?
Who, me?
Yeah, you.
Yeah, I mean, I've been looking for a house for a couple of years. It's just I want something to make something that makes it work for me. So yeah, it's me and the wife. We have some disagreements on like what kind of things we want. We don't necessarily need a house because like we're comfortable in our condo, but it'd be nice to have a yard and go out there and basically.
For you, it's
grab
like a life dream. Like you've always wanted a house, so now it's time. Essentially.
Yeah. And the thing is, like, I'm not getting any younger. It's like I was telling my wife, I was like, I'd like to just wake up in the morning, go out, into my yard and just drink a cup of coffee and go back. And that's where I'm at. Like I've always lived in apartments my entire life. I had a condo in New York. I have a condo here in Georgia, and I've always been very efficient with how I spend my money. Right. So my thing with a house, I've never thought of a house as, oh yeah, this is an asset. I've always thought like, oh, this is a place that you need to just find something that you like living in, and it's going to be, your thing. And now I'm getting to the point where I don't have kids, so I don't really need all the additional space, but I just, I'd like to have a house.
Yeah, that's fair. It is fair. Enzo, thank you for the $10 super chat. He says, craziest thing ever is SMCI is trading at sub 1 price to sales, 17 PE, growing revenues 100%. AI infrastructure is the future. Instead of raw GPU power and their direct liquid cooling are going to sell. It's a fair point, right? Why does Walmart get its multiple versus
Man, I'm sending you something. Bring this up. I haven't had time to read this, but somebody sent this to me.
Okay, real quick. Before I bring that up, can you answer this question real quick? Why do you not like Hood, Steve?
Do we really have to go down this road?
Just like give a 2 cent. The guy sent a super chat. Just a question, just sentence of.
Okay, I think that there's nothing. This is my own opinion. It's perplexing to me that everybody I talk to that uses it loves it. So I'm not gonna say it's a bad platform or anything because I've never heard a bad thing about it. I just don't understand why people would rather use that than one of the other platforms out there, such as Interactive Brokers. I just don't get it. My brain can't understand it. There's nothing proprietary about what they do, and I don't think they've built a better mousetrap. That's all there is to it.
Okay, so that's why Steve doesn't like Hood. All right, Barron's recently released an article saying that they believe Google is worth $260 a share. Huh. Okay, so they're giving Waymo 26, Cloud 26, YouTube 65, and Search 143 out of that 260. And these are the.
So if they're right, you're getting basically the entire company outside of Search for free at these levels.
I mean, look, eventually the market's going to wake up to this. We saw this happen in 2022 when Meta was trading at $80. You guys remember how ridiculous that was?
I have an article that was very bullish at 92.
And I
okay,
still
but hold
remember.
on. Here's the question: is Google at 150 similar to Meta at 88?
Yes.
Is it actually?
Yeah.
No, but why? Why is it that egregious?
But it's similar.
It's I think the thing is like. Okay, there's three things that need to happen for Google to get to that 260 valuation. Number one, search revenue still has to just keep going higher and higher, right? If search keeps that momentum, I think all the narrative, Google search is dead, all that shit is going to go away, right? So you need to have Google search sustainably grow, or if not sustainably grow, at least maintain its level. Like if you look at like market share of Google, it went from like 97% search to 96%. Right. Yeah. So it's not really a big thing. So that's number one. Number two, these lawsuits have to basically come up with a end that, ends up hurting Google a little bit, but it's a lot less than what the market is currently thinking that's going to happen. So right now people are like, Google's going to get broken up. And if Google doesn't get broken up and they just literally take a few hits here and there, they have to divest from a couple of assets, then yeah, that could be something,
Let's not forget that we know where Sachs stands on this, and he definitely has Trump's ear. And if Sachs is thinking that, a lot of other people that are around the campaign right now or cabinet feel the same way, that breaking up Alphabet or breaking up Amazon would be detrimental to the US's AI strategy. And it would help our enemies more than it helps us. And with Sachs as the AI and cryptos are, I don't see Alphabet getting broken up.
Yeah, even Trump said it. It's like China is afraid of Google, and the amount of money that Google plows into research is insane. I mean, you got most nation states that don't even spend the money that Google does on R&D. Right. Google spends close to 50 to 60 billion a year on research and development. You know how much money Google brings in for the country? Like literally all over the planet. People are searching, people are utilizing Chrome, people are using, Google Play Store, people use all these things. All of that value comes back to America in the form of, in the form of capital return. Why would you break that business up?
Yeah, I just don't see it happening. And look, I've been an Apple fanboy for a long time, and I'm going to agree with something in the chat that's going to make Amit go nuts. Google's not done, it's Apple. I got to agree with that at this point because...
Wait. You said Apple's done?
I said I'm going to agree with that comment. It's not Google that's done, it's Apple. Now, if I had to pick one of the two of those to succeed, well, I think they're both going to succeed. Alphabet's going to do more than Apple at this point, in my opinion. Apple's got some real problems, and I think they've misplayed their cards so poorly.
Wait, hold on. Did you see the Wall Street Journal headline on Apple?
No, I don't read the journal.
Okay, well, it's just a headline, but let me just pull it up real quick before you continue what you're saying. So they're reporting
for the journal.
They're reporting Apple is planning a big 2027 with foldable all-screen iPhone.
Yeah, great. Foldable screens. Who the hell wants a foldable screen?
Hold on. Smart glasses, camera-equipped wearables, and tabletop robots. Now, if we were having this conversation a year and a half ago, you would be telling me all this is bullish. So something's changed in how you're thinking of Apple.
I do like the glasses, but we did see that fail with, and you were right and I was wrong on that, with their whatever it was called. I'm just not happy with how they've allocated capital. I'm not happy that they're so far behind on AI. And I think that unfortunately, Alphabet is so far ahead of them that at this rate, if Apple doesn't do something earth-shattering, for the first time in decades, they are going to be at risk of people moving to the Android platform.
Okay, I wouldn't go that far. That's a bit ridiculous. No one's leaving Apple for Android. That's not happening.
I wouldn't be so sure about that.
I don't think they're not going to have. I think their EPS growth is going to stall, but I will never leave my iPhone. That's just not.
You say that now.
No, I'm like never. leaving my iPhone for an
You
Android.
say that now.
I don't know if I'm going to buy the
iPhone.
iPhone 19, but I'm not leaving my iPhone.
I've had an iPhone for the past 7-8 years, maybe long. No, probably longer. Probably past decade. I switched over from Android a decade ago around. And what I will tell you is, if Apple doesn't get their act together, and if Android's offerings on AI are so much better that it makes my life more efficient, and Apple doesn't, I would switch my phone back to Android and just keep using Apple iPad products.
Yeah, I think you're in the minority on that. But I think we can both agree Apple's going to suck as a stock because there's no growth, but people will still use the product. It's just they've been doing 94 billion in revenue a quarter for the past almost 12 quarters. Like there's been no growth outside of the buybacks, which helped EPS. But look, I agree. I think everyone would say Google over. So are we buying Google? Is that the conclusion? You guys are buying this Google
I
ding?
mean, I own it.
But that's not conviction. Conviction is buying it when everyone hates it. Like, are you buying it?
I'd rather buy NVIDIA or Meta here than Alphabet, but I would buy Alphabet here. Like, I think they're all buys, but it's going to be hard for Alphabet to really change the market perception of it for certain things. And I think that there's more value in NVIDIA in the short term.
Kris, are you buying? I know you have a lot of Google. Or you're muted.
I have a big enough position in Google, so I'm not looking to add.
So you don't. So you're not. You're just keeping it. You're just.
I'm just keeping it. Yeah. I'm buying more cruise lines though.
Oh my god, we have not talked about cruise lines, and so what's the thesis here? Why?
I've got a strategy, and it's going to work really well. It's been working really well. So
the Fed.
Yeah.
Okay.
CCL, baby. That's what we're doing. We're buying more CCL. We're buying more NCLH. We're going to ride this wave higher.
I have not bought the Google dip yet, but I'm being more convinced that the market's overreacting to this. But I also would like more NVIDIA. So I think it's fair. All right, cool. I think that's it for us today. Let's end it off here. This is a good question to end it off. Thank you, everybody, for being here on the Sunday Future Show. What's one stock you are thinking about? Either you have a position, don't have a position you're looking at. And for you and Steve, one sentence thesis on just something that's in your head that you might be a little bit more interested in. In the chat, I would love as well. Stock in one sentence we're thinking of.
I feel like a moron for not buying Robinhood. Like I failed myself by not buying Robinhood, especially when it dipped to the 30s again. I love this company because I use their products. I'm like, yeah, this thing is gonna pretty much dominate like the next generation of
and once again,
of
I'm
users.
shocked that Kris is not using Interactive Brokers or something.
I have Fidelity. I use Fidelity. Like majority of my portfolio is Fidelity, but I still like Robinhood. Like I have muscle memory to Robinhood right now. And believe it or not, the options experience is so much better on Robinhood because it's so clean, it's so simple. And I'm pretty sure I'm not getting the best execution, but I don't care because it's literally like maybe a couple of pennies here and there. Vlad, take my pennies. Go ahead. Just make sure you don't change this experience ever, But Fidelity is great because it gives me like versatility and like I also do fixed income, so I have fixed income stuff with that. So,
Okay, Steve, you have a stock. I have a stock in mind. I'm curious to you.
I have something that is not tech that you guys are going to laugh at, but I think it's so undervalued.
Okay, what is it?
Target.
Is it Lululemon?
Target.
I do some research in there.
Oh, it's below 100.
So undervalued. I did a lot of research on it over the weekend, and I actually wrote an article. It's coming out on Tuesday.
When did Target get below 100? Dude? Oh,
it's down 66% or so from its recent highs. Look at a 5-year chart. It got to 260 or so.
That was in 2021, but it was still at 170 in 2024.
Right, but over the past couple of years, it's gone from 260 down to below 100. It's got 4.5% dividend yield, 56 or 58 years of dividend growth, dividend king over 5 decades. It's got better margins than Walmart and Walmart and Costco. It generates, I don't remember how much free cash flow, $6-7 billion. It's been buying back shares every year. has roughly no debt compared to their balance sheet. I mean, 12 billion in debt or something like that. And it's just, I don't see Target going away. And they're really starting to tap AI and other things to fix their inventory system and create a lot of efficiencies. And they're spending their CapEx on modernizing and opening more stores. I think it's a sleeper that people aren't looking at.
It's not a bad thesis. It's not a bad thesis at all. I agree. I have two for you guys. So this, I wish I bought the dip on like Wednesday when it fell, but I just I didn't pay attention enough. Shopify. It's one of those names that was on my list on our New Year's Eve episode back in 2024. Felt like 85, 86. I might sell some puts on it. I just feel like e-commerce is growing. I know the tariff stuff is an issue. Toby's an executor. What they're doing with agentic AI and some of their payment processing stuff is also really interesting. And I feel like you buy this for a decade and you wake up and Shopify is going to be a much bigger company. So that's one. And then another one actually has to do with Robinhood, which is Virtu Financial. This bad boy is up 20% year to date. And from my understanding, they are one of the main companies that benefits from all the payment for order flow. They're similar to a Citadel. And volatility has been good this year. And so although Robinhood is outperforming them, Virtu is doing pretty damn good as well. So that's another one I'm looking at. All right, cool. That is it. Thank you everybody for being here. See a bunch of names in the chat. We got Shopify, Duolingo, got a bunch of Googles. We got Hims, Amazon, a lot of these names. We will see how the markets open up tomorrow. Currently, futures are still pretty green.
There's one defense company that, believe it or not, could be a secret sleeper. Look at Elbit Systems.
What's the ticker on that?
Let me see. 1 second. Elbit System. Okay. It's ESLT.
ESLT.
Okay.
I've never heard of these ever.
Okay. So this company is one of the biggest sleepers on the planet. And I've known about this company for a long time, but I have like apprehension to investing in like defense stocks, especially because they're used for offensive things. It's hard for me to morally do it. And sometimes I let my morals be my thing. But these guys, they do the F-35 helmet, but they also have like drone division. And one of the things that you saw during this Pakistan-India conflict was actually the utilization of a lot of their drones. So let me show you.
Do you know how expensive an F1 helmet is?
Oh, $400,000.
Yeah. How crazy is that?
What?
Yeah. And it's custom designed for pilot.
The F-16 helmet.
F-30. No, it's the F-35 Lightning. That's the
F-35 Lightning. Yeah, 465,000.
Now the thing is, they also designed the one for the Apache pilots too, with the yeah. So they've got a lot of products and it's only an $18 billion company, and literally it's an Israeli company, by the way. So if you're anti-Israel and you want to be part of that, then yeah, you can leave that out. But yeah, a lot of their stuff is being used, especially in active war zones right now. They have this thing called loitering munitions. Let me just show you guys real quick what it looks like. But it had a lot of impacts. Okay.
By the way, I'm looking at a Goldman Sachs research post from April 4th. Again, hedge funds on April 3rd sold the most amount of global stocks in one day since 2010. So we talked about this a while ago, but just for reminding people, retail bought the dip to the tune of 4.7 billion on April 3rd. Hedge funds sold the most amount since 2010. So we might see a little bit of a squeeze of hedge funds try to chase this rally. As we
I think that it's going to go down in history that I called the bottom, at the bottom.
I think it will. I think it will. See, Chris, just turn the audio off just in case.
Yeah.
You can just talk over it.
So basically this thing can, it's pretty much launched, it goes long distance. It goes into like a flight pattern where it just flies around in a circle, and AI can basically detect what you're looking for from a targeting thing. And then you hit the execute button and it literally will follow the target to its destination and impact it.
But there's a lot of companies working on autonomous drones. Like, you think these guys are just better than everyone else?
Yeah, and look at their growth rate is phenomenal, dude. Look at the stock price.
You know what company I sold so long ago that I should not have, that's getting in this now? Axon.
Yeah, Axon's a big one too.
Dude,
Yeah.
I owned them when it was like $20 when they were doing their chain of custody with the cloud storage with the cameras and everything. I made some money on it and I got out of it.
Dude,
they're
$700 now.
It's disgusting. I could have retired.
Yeah.
I didn't really understand the Axon thesis until, recently.
Yeah.
I think Chris is right though. I need to get more into defense. I don't know enough about it. I've always wanted to buy Raytheon or Lockheed. Lockheed was trading at such a good price before. But before we end, I do think we need to really start looking at energy while oil's down and utility companies. I don't think that people realize how much energy we're going to need in the next 5 years.
Well, one of the biggest benefits to Axon is not just the hardware. I think people think that it's actually the cloud service.
It's the cloud chain of custody with Axon.
Yeah.
100%.
I mean, Chevron has a 5% yield. Like Chevron has a 5% yield. This thing is a free cash flow machine, buying back shares hand over fist. I don't think oil gets to 45 or 50.
And if it does, we better get some damn rate cuts. We have to. There's just no. So that's recessionary. If I don't think Trump would let it get that low either.
How come nobody's talking about the price of gas? I don't hear anybody talking about the price of gas.
Oh, you were on Friday talking about it.
The Saudis are going to be pumping. Saudis are going to be pumping. It's good, Saudis. Okay, so this is really good for the disinflation narrative because oil prices, if they stay in the 50s and 60s for a prolonged period of time, dude, that's a huge boost to disinflation.
That's great.
Going forward. And everything that you use, everything that you see and touch has some level of petrochemicals, whether it be through transport, fertilizers, anything. So as long as oil stays in this range, the only problem with oil staying in this range is that there are a lot of companies in the Permian that are not going to be able to make any money.
We're going to see tremendous consolidation.
Right. And usually that means that the super majors end up coming in and buying things out during bankruptcy. But the bigger challenge is that we might see an uptick in layoffs in that region. So that's why go ahead. Sorry,
Chris, give me one energy name on your side, just in one sentence, and Steve, you as well.
Venture Global. I'm not even there's nothing to go with. Venture Global. You could even buy LNG, which is Cheniere. They're both fine. Next decade.
Cheniere, the handbag, right?
Yeah, the handbag.
Dude, it sounds like a handbag.
That's not even a good joke.
It's not a joke. I'm just saying it sounds like Chanel. I bought enough Chanel bags for girls in my lifetime to know that it sounds similar.
Man,
there could also be some opportunities if you want to be opportunistic, and this is something that maybe I'll talk to what's his name to Matt about, but basically Diamondback, like Fang.
I can't believe you just said that.
I bought enough diamonds too.
Dude, that's my sleeper.
I know. Well, I do my own research too, brother.
That on April 9th. They're at a 4% yield. This thing just created a new bottom, it looks like, and they are strictly Permian.
Yeah, and they're very well run.
Besides Diamondback, is there another energy name that you like?
Yeah, I mean, that I'm a big pipeline person. Energy Transfer is incredible. Kinder Morgan's incredible.
Enterprise Product Partners.
People don't realize their system for natural gas liquids is incredible because they get to siphon off of everything and keep everything that the byproducts that they're not creating for their customer, and they're able to resell that and refine it.
Look at a 5-year chart for LNG on it, because that's what you're going to see. You see massive amounts of growth. So the business model for a lot of these companies it's pretty simple.
Exporting is incredible.
Yeah, you take capex, you build these plants, you liquefy the natural gas, and you sell it. You get a fixed fee contract, and you make a boatload of cash flow. You slowly pay down the debt. You return that additional cash flow to shareholders, and you build another facility that does the same.
Does the price of oil affect the pipelines aggressively or no?
Yes and no, not to the degree
No.
that it depends. Well, no. Don't say no. Don't say no, because remember, they have take or pay contracts, but they also have spot. Let me go back.
All right. So it depends
When it comes,
which one.
right, depends on which one. Exactly. So some of them have more exposure to spot, some of them have less. So the companies that have less exposure to spot, they're not the ones that are gonna experience it.
Yeah. So with pipelines, you want to be in the pipelines that have either take or pay or fee based, because take or pay companies are prepaying or contracting for the year a certain amount of volume. They could ship 10% of that volume or 100%. They still have to pay the full freight for everything they contracted. Fee based, you get a set fee for the volume that they use. That's what I like to stay at, because we need more energy. So your capacity is going to be maxed out. That's why you're seeing so many more pipelines being constructed in the Permian and in Middle America.
Do you like NextEra as well?
NextEra Energy is a utility? Yes, I do. I like Southern Company more, but I like NextEra. But the one that I'm really starting to do research on is Oxy. I think Oxy gets acquired, and I think Diamondback gets acquired. I think we're going to see, once the Hess deal closes with Chevron, I think we're going to see more M&A next year in the oil patch.
Oxy was below 40. I mean, it's pumped over the past couple of days. It was at
Yeah, I
6.
mean, Oxy's interesting, and it's not a huge company. It's 42 billion market cap.
Wow.
You know, I wouldn't be surprised if Exxon or Chevron go on a shopping spree.
Yeah, I mean, when oil prices are low, that's when consolidation. That's your thesis on consolidation, right? That prices are cheap enough now to.
Yeah, because it depends where the break evens are. Some of these companies have really good break evens at like 30 to 35, but some are in the 40s, and believe it or not, some are in the 50s. The smaller companies, and they're not under because they have strong hedges right now. But as hedges roll off, it starts to become a problem. So I think we're going to see more consolidation in the space. And I think Oxy and Diamondback, being at their market caps, I think they're prime candidates to either merge with somebody or be acquired by somebody.
Okay, so energy. That's what Steve and Chris can agree on as one of the more underrated plays currently in this market.
Let me say one thing. It'd be very careful with energy, only because energy is dictated a lot by geopolitics, and there's sometimes things go supply constrained and sometimes things go oversupplied, right? So right now, Diamondback, it's taking a huge hit. Why? Because oil prices are low. If they stay low for a long period of time, you're going to be in a world of hurt, primarily because their profit margin is going to get squeezed. Okay, so you have to be with energy. When you're dealing with energy, make sure you understand the dynamics of the underlying like business. So Diamondback is upstream. So upstream is different than something like midstream, which is what Steve and me were talking about. So, you know, when it comes to a lot of energy companies are never, in my opinion, just buy and hold companies. Okay. Would you agree to that, Steve?
I mean, for the most part, unless it's Chevron or Exxon, you're just holding it for the dividend.
Yeah.
Or some midstreams. I mean, if you're saying you're buying it for a dividend play, there's some that are buy and hold. I'm not looking at energy to replace tech. I don't think it has that type of upside potential. I just think that there are some energy companies that are undervalued, and there's an opportunity. But you look at a 10-year outlook, I mean, or a 10-year look back, these are not exciting charts by any means. And it's always traded at a discount. I just think that with oil where it is, it's creating some opportunities for long-term investors. And if we can pocket a good dividend and compound that for the time being, I think there's some plays that can work out pretty well.
Yeah, I mean, there's no money like tech, man. Tech makes money.
No money like
Tech's
tech.
got The only challenge with tech is that they could get disrupted, right? Like Yahoo, remember?
Yeah.
BlackBerry. So you always have to keep your eye on the ball, because if the technology that's underlying your business is going to get disrupted, then you better. And the funny thing is, it's very, very hard for a company that's actively being disrupted to turn themselves around.
Yes.
So
The innovator's dilemma.
yeah.
Shout out to Priya, by the way. I'm watching the stream in the flight with AirPods. The person next to me is very confused looking. Just sees 3. First of all, what flight are you on that's giving you the stream? Because United still, I can't stream on United. So
Delta probably.
Delta lets you stream.
Well, I mean, they have the internet because of Starlink. I know a bunch of airlines now have Starlink. Dude, one of my theses for the cruise lines is actually Starlink.
I know you've said it, dude. We know. You've said it a billion times. We know your thesis. Internet gets cheaper, more people want it. Yeah, we got it.
Yeah.
So.
Oh no, here they come. Just buy XAI. Blah 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 blah. These fucking bastards.
You're the end of the stream. Every time they come.
These
all right.
fucking.
Thank you guys. We appreciate it. Futures are up big. We will see when the market opens tomorrow. Basent's talking. If we can maintain this momentum, Steve and Chris's Twitters in the description. Appreciate you all, and we will do a lot more research into energy. I know Steve's been looking into it a lot more, so we'll go deeper into that. Steve's latest Meta article, I'm putting here in the chat. You guys can click on
thank
it.
you, Matt.
Yeah, of course.
I'll respond to everybody who leaves a comment.
All right, take care, guys.
There you go. Take care, everybody. See you guys tomorrow morning. Bye, everyone.